I'm duct taped to the screen again, counting every breath in broken percentages. My chest moves like a ticker tape, up and down and down and down. I built a bed out of Bloomberg screens, tucked myself in with 1,000 bad dreams. She crawled through the wires with charts in her mouth, said if you wanna feel rich, you gotta burn down the house. It's just business. Fuck this market, it's inside me. Fuck this market, can't help it, insanity. Fuck this market, turn my blood to equity. Fuck this market, fuck it. She trades like trauma, hot tips in a hospital gown. I married the bell curve and slept through the vows. 1,000 screens flicker like flies on meat. The smell of debt got it stuck in my teeth. She said it's just a dip. Then why do you fucking drown me? Fuck this market, it's inside me. Fuck this market, can't help any sanity. Fuck this market, turn my blood to equity. Fuck this market, fuck it. Debt account, limit breach. Please remain calm. This is your liquidation notice. You took everything. Fuck this market, it's inside me. Fuck this market, can't help any sanity. Fuck this market, turn my blood to equity. Fuck this market. I don't wanna trade tomorrow if it looks like today. I don't wanna wake up if the open's red anyway.
Oh, brother, oh, brother, oh, brother. Good morning, folks. We are starting a little bit early today because we are about to get the Treasury Secretary, Mr. Scott Bessent, joining the White House press conference, briefing, whatever you want to call it. But that's going down in about 2 minutes. And this one, the reason we're starting early is because there's a lot of suspicion that we're going to be getting some sort of announcement related to a trade deal being struck potentially either with Japan or with India, or just maybe a generic update on what's going on with this trade war, tariff war. So that's all going down in literally about 2 minutes. So that's where we're getting started today. And then from there, we're going to be listening to that, see what the Treasury Secretary and obviously Ms. Leavitt have to say. And then from there, we're going to be getting into a whole host of earnings this morning. We heard from Coca-Cola, SoFi, Pfizer, PayPal, General GM. We heard from there's so many, UPS. We heard from Spotify. We have a lot of earnings to go over. We do have a little bit of a different trade war update related to automotive industry, and we have some commentary on Trump and a decision made there. So we're going to be going over that. That's kind of the plan. That's why we're starting early. So I appreciate you guys. Obviously, kind of coming out of left field here. And then for the rest of us, I'm going to kind of give you guys an option. I'm gonna be one of those nice people and give you guys, my audience, an option of later today. The Commerce Secretary, Mr. Howard Lutnick, will also be doing a press conference at 2 p.m. So your options are pretty much this. Do you want me to do an update video after the market closes, or would you guys rather live stream that in the afternoon? It's completely up to you, and I'll ask you guys later. So I just want to put that out there that we have another person from the administration making apparently a very important announcement, speech, taking interview questions later today, 2 p.m. Eastern, the Commerce Secretary, Mr. Howard Lutnick. So please do do not forget about that. So we got Basent coming on in literally a minute, and then we have Letnick later on today. And I guess when more people get in here, just because I did kind of catch you guys a little bit off guard by starting so early, I'll ask you guys if you'd rather the stream or the update video, and we'll come back to that. But let me make sure we are ready to go over here. I believe we are. We got this rocking. We got the audio. I'm not seeing anything yet. Nope, just a lot of commotion in the background. Actually, you know what I'll do is I'll put on this volume for me and then just not annoy you guys for the time being. So we're just waiting right here. White House press briefing with Caroline Leavitt and Secretary Basent. The fact that the Treasury Secretary is joining is exactly why everyone's like, yo, are we going to get some sort of announcement? So I don't know if it's going to be a big deal. Definitely has the potential to be a big deal, which is exactly why we are here early today. Now, before we hear them actually talking, you should know that we are slightly below the closing value on both the SPY and the Qs, but granted, we have over an hour until the market opens. Bitcoin holding pretty steadily at 95,000. We have vol ticking up a little bit, and then some of the recent popular stocks right here. Tesla holding decently, 286. MicroStrategy actually slightly higher at 371. Palantir's been on a tear as well, currently trading at 114. And then Netflix, another one that actually hit an all-time high, hanging out at 1,100. So just kind of quickly going some of the major ones that I see you guys talking about day in and day out. But for right now, I'll leave up MSTR just because we know it's highly correlated with crypto and obviously Bitcoin trading right there at 95. And then Tesla, obviously not only recently being a high flyer, but like I said, we do have some announcements there. Trump to reduce impact of auto tariffs, Commerce Secretary says, and we're probably going to get more commentary on that later today. Once again, 2 p.m. I just retweeted this. Basent to join the White House press briefing at 8:30 this morning. Right now, Letnick, obviously Treasury Secretary up here, Commerce Secretary down here. Letnick scheduled on CNBC at 2 p.m. Eastern. So we got the old double interview, I guess, situation today. So let's obviously pay attention to that. But who knows? This is why we do it. This is why we do it. And I guess as we're awkwardly waiting for them to tell us what in the world's going on, what's not going on, what's your best guess? What's everyone's best guess of how this is going to play out? Are you expecting this to be some positive news, like a bullish development, or do you think they're going to rug us another time here? I mean, all I really know is I wouldn't say that these speeches are notoriously bullish or bearish. It seems like it's a 50-50 flip, but it does seem as if it brings big swings with it, a high amount of volatility. So I'm just saying get ready, but looks like they're about a minute or two late unless our stream is behind. Let's see what in the world is going on here today. Let me see if I'm seeing if I could just find another stream. I want to make sure we are not behind in any way, shape, form, or manner. Doesn't the White House their own? That's Right Side Broadcasting. White House. I thought the White House had its like own direct stream for these press conferences. They do. Okay. Yeah. So here's the other one. So we're not behind. This one just says we will begin shortly. And then this one's from Vox and it's just people in the room. So we're not missing anything, at least not quite yet, to the best of my knowledge. It'll be a nothing burger, probably bullish sentiment, but shitty price action, hopefully rug. Right now, I can tell you, I already put this in the Discord, did a pretty extensive just options breakdown. The option structure right now, as in the shorter and medium term bets, they definitely are bullish. We are clearly, without a doubt, we are clearly call dominated for the upcoming days, the upcoming weeks. So I think that is an important shift. It hasn't been that way for a while. And over the past week and a half, we've seen that clear shift from being put dominated to call dominated in the short term. So whether those players are right or wrong, all I could tell you is that optimism in one form or another is coming back into the market. So are they right? Are they wrong? Obviously, time will tell, but I can definitively tell you that we have officially gone from being very, very dominantly put dominated, very dominant, to actually right now, the longer duration, if you're looking at the major quarterlies and monthlies, still put dominated in those AM settlements. But by the time you look at all the PM settlements, it is clearly straight up call dominated. So I would argue like just from what we're seeing, that right now the bulls are in control. And from a pure level standpoint, I guess since we're waiting for them to get started, I could kind of show you this. If we remain above 5,500, the bulls are in control, and above 5,600, if we break and hold that, that stuff is legitimately bullish based on the current option structure. So this right here is more of that transition zone on the 0DT. I would say if you take a step back and include further expirations, the transition zone just widens a little bit. It goes from 5,500, maybe instead of to 65, it comes like to 25 or 30. And that's the overall transition zone, bullish above, bearish below. So the TLDR is this, is the bulls are in control above 5,500. Between 5,500 and 5,400, I would say that's like the awkward in between of who's doing what. And below 5,400 is where the bears most likely start to regain control once again. So that's just kind of the higher level TLDR of who's doing what, who's in control, who's not in control. But clearly where we were as of close yesterday, bulls in control. And based on some of the action this morning here, let me see the current spot price. We're around 5,524. So that puts us pretty much just below where we closed here, and obviously still in the bullish territory. So I obviously rugs can. Are we starting? I just heard something. No, we're still. It's getting quiet though, so maybe we are starting soon here. Just waiting. Come on. But right now, like I would say at this point, the bears are guilty until proven innocent, and right now the bulls are a little bit more on the easy street, if you will, more so on the easy street. But we'll see. All right. So with all of that, I guess we're a little late. Maybe they're finalizing something. Maybe they have to make sure what they want to announce is legit what they want to announce. I'm a little nervous here. I mean, what in the world's going down? Traders are all fired up about the thrust indicator. That's likely where the put call ratio is coming from. Highly doubt that. Remember, big put and call buying, those are from big institutions. They're not using the thrust indicator. First of all, I don't even think that's popular within the retail sector. But even if it were, remember that the retail sector is absurdly small compared to actual trading going on. A lot of trading is coming from bots, just market making for liquidity purposes. And then from there, you're looking at big institutions. You're looking at hedge funds. You're looking at insurance firms. You're looking at like legit big players. They're not using the thrust indicator. Like it's just a lot. I know it's easy. Ooh, actually, we're getting a little bit of a pop here right to the close. So we're going to be opening up pretty much where we left off yesterday, which oddly enough, where we left off yesterday is where we opened up. Even though the daily chart and the daily return kind of shows nothing, intraday it was kind of crazy. Big drop followed by a big pump right in, like just that classic V shape. I'll go over this in a bit, but when I left you guys, I was either down or 2 or 3K on every single one of my like SIMDA funded accounts. That actually got worse. It got all the way down to 4K per account, and I had 6K buffer. So I gave back 4 of the 6. I gave back like literally over half my buffer, but I was able to catch a good chunk of this pump. So I think I ended up the day down like 1.6 instead. So it was a pretty decent recovery. I suppose. Still red on the day, and had I top ticked it, I would have, yes, been out perfectly, but I don't know if you can really hold yourself to that particular standard. But anyway, we're still just kind of awkwardly waiting here. I guess they're not on time today. I wonder if they really are trying to figure out what in the world is going on. Come on, give us some info. Tell us what's going on. HIMS is up 28% in pre-market. Yeah, they had wasn't there an announcement of someone purchasing something like that? I totally agree. Not interested in some thrust indicator BS. The breadth thrust indicator is highly successful in forecasting an upside mood. If it were highly successful, you would then probably have unlimited money. How do you determine your buys? That's an excellent question. Oh, hang on. Hold that.
First 100 days. Before we begin, I want to acknowledge that the bipartisan Take It Down Act passed the House last night. This important legislation was championed and guided through Congress by our wonderful First Lady, Melania Trump, including through her direct advocacy on behalf of survivors during her passage efforts. The Take It Down Act criminalizes the publication of non-consensual intimate imagery and requires social media and similar websites to remove such content within 48 hours of notice from a victim. The First Lady thanks all those who voted in favor of this important legislation, and the President looks forward to signing it when it arrives on his desk. Today officially marks 100 days of promises made and promises kept by President Trump. This has truly been the most historic start to a presidency in American history. After building the greatest economy in the world in his first term as president, President Trump is in the process of doing that all over again. The American people trust in President Trump. Since his first day in office, President Trump has focused on defeating the Biden inflation crisis, bringing down the cost of living, and making the United States the best place in the world to do business, invest, create jobs, and innovate. And President Trump's efforts are working. 345,000 jobs have already been added since the start of President Trump's term. Last month's jobs report saw nearly 100,000 more jobs than economists predicted, and it was the fourth highest month for private payroll growth in the past 2 years. 9,000 manufacturing jobs have been added to the economy already. This is a sharp contrast to the 6,000 manufacturing jobs that were lost each month in the final 2 years of the Biden administration. The U.S. employment rate remains at historic lows. And thanks to President Trump, Americans are seeing price relief for the first time in years. The last inflation report showed the first consumer price decline since the COVID pandemic, a decrease in energy prices, and real average hourly wage growth. President Trump is delivering on his promises to lower costs for American families and businesses. Prices across the board for everyday goods have seen declines since this president was inaugurated. From airfare to used motor vehicles to prescription drugs, prices are dropping. In fact, last month's drop in the price of prescription drugs was the largest ever recorded. And after Joe Biden botched the response to the bird flu, President Trump and Secretary Rollins' aggressive plan have brought down wholesale egg prices more than 50% from Inauguration Day. President Trump ended Joe Biden's reckless war on American energy and fossil fuels and has restored American energy dominance. And Secretary Wright, Secretary Doug Burgum are working hard on that effort every single day. Oil and gas prices are now way down because of this bold approach. Gasoline prices down 7%, energy prices are also down as well. The Department of Interior just announced a new offshore drilling policy that will boost oil production in the Gulf of America by 100,000 barrels per day. On the deregulation front, President Trump is committed to cutting senseless red tape, especially for America's small business owners who are the backbone of our economy. We know cutting regulation leads to lower costs and higher growth. The mass deregulation effort by this administration will help usher in the golden age of America, which is underway. Immediately upon taking office, President Trump blocked all of the unfinalized Biden-era rules, saving America's more than $100 billion, or $2,100 per family of 4 over the next decade. And the president also launched a bold multi-agency effort to roll back existing federal regulations that drive up the cost of living on hardworking families. This effort is projected to yield significant cost savings in the coming months, including the EPA's rollback of tailpipe emission rules for light-duty and medium-duty vehicles and the Department of Transportation's latest corporate average fuel economy standards. These two efforts alone yield $755 billion in total savings, or more than $8,800 per family of 4 over the next decade. In total, the combined savings from all of these actions equal just over $935 billion, or nearly $11,000 in real savings per family of 4 per the coming decade. The press is not talking nearly enough about the positive impact of President Trump's deregulation campaign. And investments from the biggest companies and countries in the world are pouring in under this president. So far, total investment commitments under the Trump administration have reached more than $5 trillion, including $500 billion from Apple in U.S.-based manufacturing and training, $500 billion from NVIDIA in AI infrastructure, $100 billion from TSMC and U.S.-based chips manufacturing, and the $500 billion private investment by OpenAI, Oracle, and SoftBank in AI infrastructure as well. All of these investment commitments are estimated to generate at least 451,000 new high-paying jobs for American workers and families. At this point, President Trump has secured more investments in the United States of America in 100 days than Joe Biden did in 4 years. President Trump is America's businessman in chief, and that's why these trillions of dollars in investments are flooding to our country. The business community is bullish on America because President Trump is back in charge. Tomorrow, the president will host CEOs and leaders from several companies that have made these investments to tout their historic commitments to our country and encourage others to follow suit. Under President Trump, there has never been a better time to invest in America. And the president finally said enough is enough and refused to allow America and our workers to be ripped off any longer on trade. President Trump implemented powerful tariffs to end the era of economic surrender and to rebalance America's trading agreements. More than 100 countries have already come to the table looking to offer more favorable terms for America and our people. There has never been a president who has created his own leverage like this president, and we are just getting started. Republicans in Congress are getting very close to passing President Trump's one big, beautiful bill, which will include the largest tax cuts in American history, strong border security measures, major military advancements, dramatic deregulation, and common sense spending
Market's
reforms.
popping on all of
As
this.
President Trump has said before, the best is yet to come. For more on President Trump's economic successes so far and the plans ahead, I want to pass it off to our incredible Treasury Secretary, Scott Bessent, who is here today, and we will open it up to questions. In our new media seat, we have Brendan Peterson, the financial services reporter for Punchbowl News. Punchbowl News covers power, people, and politics based in Washington, D.C., laser focused on Capitol Hill, the politics of legislating, founded in 2021, and it is the first newsletter that Capitol Hill and the White House reads every morning in the middle of the day and throughout the evening. Thanks for being here with us, and we'll start with you today.
Here we go, folks.
Thanks so much for being here. I have a question for Secretary Bessent. On tariffs, the president said over the weekend that we are hoping that maybe tariff revenues could replace income tax. But we also keep hearing about the deals that the administration is pursuing. So my question is, what is the White House's ultimate objective here? Do you want to have long-term tariff revenue or deals that might reduce those tariffs?
I think it's a combination of both. So we're going to take in long-term tariff revenue. We put a process in place. We have 18 important trading relationships. We will be speaking to all of those partners, or at least 17 of them, over the next few weeks. Many of them have already come to Washington. What President Trump is referring to is the ability for tariff revenue to give income tax relief. And I think
Market
there's a
just
very
took a
good
turn.
chance that we will see this in the upcoming tax bill. The president campaigned on no tax on tips, no tax on Social Security, no tax on overtime, and the restoring interest deductibility for autos, for American-made autos. So tariff income could be used for tax relief on all of those immediately.
So you think that there is a role for significant tariff revenue in U.S. fiscal policy?
I think that it is something that got put away a long time ago, and I think that tariffs will bring back American manufacturing and generate substantial revenues.
On manufacturing, we've seen some pretty grisly surveys this month from the Philly Fed, which saw the biggest drop since May of 2020, and the Dallas Fed, similar plunging outlook, poor shipping orders. What are American manufacturers not understanding about your push for onshoring in the U.S.?
Well, I think I was in the investment business 35 years, and I learned to ignore the survey data and look at the actual data, and the actual data has been quite good. The job data is good. Americans keep spending, and as Caroline said, we have these incredible commitments to bring manufacturing back on shore with record investment by domestic corporations and foreigners who want to come into the U.S.
Thank you so much, Caroline. Thank you, Mr. Secretary. The Chinese continue to say that the U.S. and China are not engaged in any consultation or negotiation on tariffs. You recently said you've talked to your counterpart, but more about, quote, traditional things like financial stability. So can you clarify, is the administration talking to Beijing specifically about tariffs or not?
Well, we're not going to talk about who's talking to whom, but I think that, over time we will see that the Chinese tariffs are unsustainable for China. I've seen some very large numbers over the past few days that show if
Sounds
these
like we're
numbers stay
not
on,
talking to
Chinese
China.
could lose 10 million jobs very quickly, and even if there is a drop in the tariffs, that they could lose 5 million jobs. So remember that we are the deficit country. They sell almost 5 times more goods to us than we sell to them. So the onus will be on them to take off these tariffs. They're unsustainable for them.
And they are saying you guys are not talking about it. So is that true?
Look, they have a different form of government. They're playing to a different audience. So I'm not going to get into the nitty-gritty again of who's talking to whom. But
So
as
are
I
we
said,
talking?
I believe for the Chinese, these tariffs are unsustainable.
And very quickly, 2 days ago, you said you didn't know if President Trump had spoken to Xi Jinping. Do you know now?
Again, I would say Caroline and I have a lot of jobs around the White House. Running the switchboard isn't one of them.
Bloomberg, go ahead.
Secretary Bissett, thank you so much for being here this
Doesn't
morning.
really sound like they're talking
You've
to each
talked about
other.
the importance of giving investors certainty when it comes to the market, yet the Trump administration is continuing to negotiate several complex trade deals in a very sort of compressed time frame. When do you expect you'll be able to give the market some certainty around those deals? Do you have a deadline? Is it the 90-day pause? What are we looking at here?
Good question. And I think one thing that has been a little disconcerting for the markets is, President Trump creates what I would call strategic uncertainty in the negotiations. So he is more concerned about getting the best possible trade deals for the American people. We had 4 years of bad deals for decades of unfair trading, and we are going to unwind those and make them fair. What we are doing is we've created a process. I think the aperture of uncertainty will be narrowing, and as we start moving forward announcing deals, then there will be certainty. But certainty is not necessarily a good thing in negotiating.
Mr. Secretary, last night there were reports on the administration sort of walking back a little bit on the auto tariffs. Can you sort of just elaborate on that decision there and what we can expect going forward, and why sort of the shift in those auto tariffs?
Well, President Trump has had meetings with both domestic and foreign auto producers, and he's committed to bringing back auto production to the U.S. So we want to give the automakers a path to do that quickly, efficiently, and create as many jobs as possible.
Jasmine.
Thank you so much, Caroline. Thank you, Secretary. Back on China, does the administration anticipate supply chain shocks or supply shocks coming now that cargo shipments from China are significantly down? And if so, are there plans in the process of how to address that?
I wouldn't think that we would have supply chain shocks, and I think retailers have managed their inventory in front of this. I speak to dozens of companies, sometimes daily, but definitely weekly, and they know that President Trump is committed to fair trade and have planned accordingly.
And then second question, can you outline the timeline for when you think some of these deals, particularly with your Asian countries like India, Japan, South Korea, you may have an announcement?
I'm glad you brought up our Asian trading partners and allies. They have been the most forthcoming in terms of doing the deals. As I mentioned, Vice President Vance was in India last week. I think that he and Modi made some very good progress, so I could see some announcements on India. I could see the contours of a deal with the Republic of Korea coming together, and then we've had substantial talks with the Japanese.
Andrea?
Secretary Besant, just continuing on the path of the sort of like progress. You said yesterday, I think, that it was could happen as early as this week or possibly next week. Can you give us a bit of a timetable, and then I wanted to ask about South Korea specifically. They've said that they probably won't be able to make a comprehensive deal until early July because of their elections. Japan also has elections. And to what extent are domestic factors complicating your efforts? Canada just had an election. You know, are you seeing that you might have to think about delaying the 90 days?
Well, I would actually take the opposite tack, that I think from our talks that these governments actually want to have the framework of a trade deal done before they go into elections to show that they have successfully negotiated with the United States. So we are finding that they are actually much more keen to come to the table, get this done, and then go home and campaign on it.
Sean?
Was there, I'm sorry, did you have a comment on whether something could happen this week or next week? For a deal. So, you know, you said yesterday.
Again, I think that we are very close on India. And
Very close,
India,
but no specific date.
Just a little inside baseball. India, in a funny way, is easier to negotiate with than many other countries because they have very high tariffs and lots of tariffs. So it's much easier to confront the direct tariffs when, as we go through these unfair trade deals that have been put in over decades, that the non-tariff trade barriers can be much more insidious and also harder to detect. So a country like India, which has the posted and ready tariffs, it's much easier to negotiate with them. So I think the India negotiations are moving well.
Sean, go
Hi,
ahead.
Mr. Secretary. So it was reported this morning that Amazon will soon display a little number next to the price of each product that shows how much the Trump tariffs are adding to the cost of each product. So isn't that
Really?
a
That's
perfect,
crazy.
crystal clear demonstration that it's the American consumer and not China who is going to have to pay for these policies?
I will take this since I just got off the phone with the president about Amazon's announcement. This is a hostile
I didn't hear that.
and
That's crazy.
political act by Amazon. Why didn't Amazon do this when the Biden administration hiked inflation to the highest level in 40 years? And I would also add that it's not a surprise because, as Reuters recently wrote, Amazon has partnered with a Chinese propaganda arm. So this is another reason why Americans should buy American. It's another reason why we are onshoring critical supply chains here at home to shore up our own critical supply chain and boost our own manufacturing here.
Is Jeff Bezos still a Trump supporter?
Look, I will not speak to the president's relationships with Jeff Bezos, but I will tell you that this is certainly a hostile and political action by Amazon. And Secretary, if you have anything to add.
Yeah,
What?
I would also add that the bringing down the terrible Biden inflation has been a priority for the first 100 days of the Trump administration, and President Trump has done a great job of leading that. Since January 20th, interest rates, mortgage rates are down, gasoline and energy prices are down. We're expecting the further decreases, and as Caroline said, the big tax on consumers that goes unnoticed is deregulation or regulation, and we are deregulating and bringing that down. So, from a household income point
Hostile
of view,
act
we
by
would expect
Amazon.
real purchasing increases. We've seen them over the first 100 days, and we would expect
Bezos
that to accelerate.
was there at
We are
the
doing
inauguration.
peace deals, trade deals,
Awkward.
tax deals, and deregulating. And the deregulation is a longer lead time, but I think by the third and fourth quarters, that's really going to kick in.
Kelly, go ahead.
Thank you, Caroline. A question for you and Secretary Bessent. We talk a lot about volatility and uncertainty in the marketplace, and the president has stated all along that he's more concerned about mainstream America, the American worker. You just talked about deregulation and this entire fair trade and reciprocals. What is your message to the American people in terms of letting them get through this disturbance and the outcome being greater and a greater good for the American worker, the American people, the American families?
I would say trust in President Trump. There's a reason he was reelected to this office. It's because of the historic success of his economic formula in the first term, and as I laid out at the beginning of the briefing and the Secretary has talked about and the President talks about every day, there's a proven formula that works. Massive deregulation, energy independence, and tax cuts, which are coming. And the Secretary is working very hard on that with our counterparts on Capitol Hill. If you want to talk about that, that's a huge deal to put more money back into the pockets of hardworking Americans. As for the fair trade deals the president is trying to negotiate, he's not just righting the wrong of the mess that he inherited from the past 4 years of the Biden administration. This is a mess that has been created for the past 4 decades, that has sold out the middle class, that has moved jobs overseas. You think about our heartland, middle America, what towns used to look like, what they look like today. President Trump wants to restore the golden age, and it's a process to do that. And that process is underway, but he's put together a fantastic trade team. Secretary Bessent, Secretary Lutnick, Jamieson Greer, all working incredibly hard on this effort 24/7. But tax cuts are coming, and that's key. And Mr. Secretary, why don't you talk a little bit about that?
Yep. So it's really a three-legged stool in the economic policy. It's trade, it's tax, and it's deregulation. So we are in the midst of addressing, as Caroline said, these long-term trade imbalances. The tax bill is going much better than I would have thought when I took office on January 28th, and that's through President Trump's leadership. That Speaker Johnson, Leader Thune are united. Speaker Johnson, we had a very good meeting yesterday with somebody called the Big Six, NEC Director Kevin Hassett, myself, Speaker Johnson, Leader Thune, Committee Chairman Jason Smith, and Senator Crapo. And the tax bill is moving forward. It is going to give permanence to the 2017 Tax Cuts and Job Act, which will, back to the question on certainty, it will give American business certainty, it will give American people certainty, and then President Trump is also adding the things for working Americans that is talked about earlier: no tax on tips, no tax on overtime, no tax on Social Security, making auto payments deductible. So that will substantially address the affordability crisis. And the other thing that I would note, and back to data, is that the Vanguard, one of the largest money management firms in America, said that over the past 100 days, 97% of Americans haven't done a trade, and in fact, individual investors have held tight while institutional investors have panicked. So individual investors trust, investors trust President Trump.
Megan, in the back.
Can you detail for us exactly what we should expect as far as relief on the auto tariffs front? And then further, Mr. Secretary, should we expect other industries to also get relief the way we've now seen for auto and tech as well?
I'm not going to go into the details of the auto tariff relief, but I can tell you that it will go substantially toward reshoring American auto manufacturing. And again, the goal here is to bring back the high quality industrial jobs to the U.S. President Trump is interested in the jobs of the future, not the jobs of the past. We don't need to necessarily have a booming textile industry like where I grew up again, but we do want to have precision manufacturing and bring that back. And another important, very important function of this that does not get talked about enough is national security. President Trump, his overriding concern and belief is that economic security is national security is economic security. And we saw during COVID that our supply chains got cut off. And we need to bring back a lot of those supply chains, whether it's in semiconductors, medicines, the steel, and we have to onshore those. So it's a combination of making trade free and fair and remedying this gaping national security hole that he was left with.
I would just add, Megan, the president will sign the executive order on auto tariffs later today, and we will release it as we always do. Go ahead.
Secretary, any updates on the negotiation with the European Union, and is it hard to negotiate with the European Union?
Pardon?
Do you have any updates on the negotiation with the European Union?
I'm more involved in the Asian negotiations. My observation would be, goes all the way back to Henry Kissinger's statement, when I call Europe, who do I call? So we're negotiating with a lot of different interests. Some of the European countries have put on an unfair digital service tax on our big internet provider. France and Italy, other countries, Germany and Poland, don't have that. So we want to see that unfair tax of one of America's great industries removed. So it's going to be a give and take. So they have some internal matters to decide before they can engage in an external negotiation.
Edward.
Thanks, Caroline. Mr. Secretary, so contacts I have in the business community say that they're basically frozen for long-term investment because of the uncertainty around tariffs. How long do you think President Trump has to make a deal before there's damage to the economy?
Look, I think that what we're seeing is that business leaders, they've gone into a pause, and I think we're going to give them great certainty on this tax bill. And I think over the next couple of weeks, as I said, we have 18 important trading relationships. We'll put China to the side. 17 they are in motion. And then, as I said yesterday, I think there's a very good chance we're going to get this tax bill done. And the tax bill is going to be very powerful for domestic
China
US
to the
investment. So what we
side.
are going to do, one of the most powerful parts of President Trump's 2017 tax bill was full expensing of equipment. We are going to make that, as President Trump said in his speech to Congress, that will be retroactive to January 20th. The other thing that we are looking to add is full expensing for factories. So bring your factory back. You can fully expense the equipment and the building. We will couple that with deregulation, cheap energy, and regulatory certainty, and that will continue to make the U.S. the greatest destination for domestic and foreign investment.
And the president, well, if I could follow, just the president said that world leaders would like to meet with him in Rome, in Vatican City, about trade. Other than President Zelensky, who did the president meet with, and about trade, and when could we get some of those deals?
The president met with President Zelensky, as you know, which we talked about, and the president continues to be engaged with his fellow leaders around the world in the European Union. You've seen many of them visit the White House. I want to harp on, in closing, the point the Secretary just made. On the campaign trail, the president promised the American public that he was going to make America the best country in the world to do business again. The lowest taxes, lowest regulation, lowest energy costs of anywhere in the world. And if you do business in the United States, you won't pay a tariff, you won't pay a price. That's not just good for companies around the world, but it's good for the American worker. That's what this team is focused so hard on every day. We have work to do. The golden age of America is underway, but as I pointed out in the beginning, there's a lot of reason for the American consumer, the American CEO, the American small business owner to be confident and optimistic about this president and where we're headed. So you will hear more from the president himself later this evening. He is traveling to Michigan, as you all know. He'll make a stop at the Air Force Base with Governor Whitmer, and then we will head to a rally tonight where you'll hear more from him directly. So we'll see you in Michigan. Thank you, guys.
Well, well, well. The market was not the biggest fan of that because it was a bit of a nothing burger. Definitely a bit of a nothing burger, if you ask me. Here, let me get this set up to where it should be. Here's a quick peek. Yeah, the SPY, right when they started talking, the SPY went above the closing value. The Qs went above the closing value. And then when the world kind of realized that he was saying nothing, if you ask me, it sounds like he was strongly hinting at the fact that we are not talking with China. It seemed easy when you're asked, like, are you talking with China about trade? He's like, I can't talk about that. If we were, you'd think, yes, we are talking with China. You would think that he would be a bit more just like, evidently, yeah, we're talking with them. And instead he took more of the kind of like that awkward political lawyer talk of like, we just can't talk about that right now. We can't talk about that right now whatsoever. So it sounds like we're not talking with China. And then the other commentary that I thought was interesting is like, we have 18 important trade partners. 17 of them we're making like good progress with, and then the 18th, i.e. China, will set to the side. So it seemed, unless it was like maybe it was misspeaking, maybe it was a Freudian slip, maybe it was somewhere in the middle, but I don't think we should be necessarily holding our breath on getting a deal with China, because it doesn't sound like it's necessarily coming around anytime soon. But he did say in the coming weeks, multiple weeks, not week, but weeks with an S, it sounds like we might be getting a deal with Japan, India, and South Korea. And he was strongly insinuating the fact that we are the closest with India, which is obviously a very big trade partner with us. So that might be a bit interesting. That could, I suppose, add a little bit of fun to the overall market situation. Those were the major things that jumped out to me. But also, I just want to remind you, they kind of said it right at the beginning. So if you just joined late, it sounds like tomorrow President Trump will be meeting with various business leaders. So maybe something does or doesn't come out of that. Maybe it's some darlings of the S&P 500 or the Dow or the NASDAQ. So Trump meeting with business leaders here in the U.S. tomorrow. That could be important. Obviously, Trump will be in Michigan for some sort of support rally later today. So I'm sure he'll have something to say about trade and the economy and what's going on in the U.S. So pay attention to that. But I don't want anyone to forget that at 2 p.m. today, 2 hours before the market close, an hour before Power Hour, the Commerce Secretary Lutnick will be on CNBC. And I asked the people early on stream today what you would prefer me to do. But now that we have enough people here, this is going to be a community vote. You get one of two today. Would you guys prefer me to make an update video when the market closes and kind of do the whole breakdown of options and what to look forward to the next day? Or would you prefer for me to stream at 2 p.m. with the Commerce Secretary going on CNBC, Mr. Howard Lutnick? So it's you guys. It's the community vote. Community vote. What would you prefer? Update video after the market closes coming out at like roughly 7 p.m. as we normally do, or would you rather a specialty stream at 2 p.m.? Which one would you guys prefer? Vote, 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 vote. Let your voice be heard. This is a democracy unless I don't like the answer, and then it's a dictatorship. That's how we run this thing. 2 p.m. stream, update vid, both. Nothing but the truthy truths. Why Amazon tanking? I'll cover that in a second. Update, stream to stream, video live, update, video, stream, market update, 2 p.m., stream, Power Hour, both. Okay, I'm actually surprised how close it is, but I do think that the streams have the vote by a little bit. So we will be doing a specialty stream at 2 p.m. Eastern today, right before 2 p.m. Eastern, just to see what Mr. Howard Lutnick has to say on the current state of trade. And obviously, when he does talk, it does have an impact on the market, so I don't mind streaming it whatsoever. A lot of you are commenting that Amazon is dying. Yes, it is down, dropped 0.7% yesterday, down an additional 2.5% this morning, and that directly relates to what we just heard from Levitt and Besant. And basically, I didn't know this. It's, I guess, breaking news as of this morning. They're going to start putting prices on the products on Amazon's e-com website that shows you how much the tariff is impacting it. And then obviously that is putting the company in the crosshairs of the administration, which is why the stock is going down, because they're making an enemy out of the administration. And generally, you don't want to be fighting the most powerful people in the world when you are running one of the largest businesses in the world. So Amazon getting hit because, as Levitt described it, this was it's being interpreted as a hostile political act from a business against the administration. So Amazon, that's exactly why it's going down. So I actually didn't know Amazon stock. I want to see exactly their reasoning for this. 16 hours ago, 21.58. Pressure suppliers to cut prices. That was 9 hours ago. So I guess it's coming out. Jeff Bezos' final. But what's weird is Bezos was at the inauguration. He was there and seemingly had a good relationship with Trump. So it sounds as if I had to guess, this decision was not being made by Bezos himself. I'm trying to find some information. And we're going to hear more from it right here. Amazon's going to report after the market closes on Thursday. So not today, not tomorrow, but the next day. We hear from both Amazon and Apple. But the reporter at the White House conference this morning, Amazon, let's see, was this was the first I heard about it. Oh, right here. Amazon planned to show tariff costs a hostile act, according to Levitt. But I want to know the reasoning after White House accused the company of a hostile and political act. this morning, right here. So this did come out this morning. This morning, Amazon announced that they would show the cost of President Trump's tariffs on each product. Just now, the White House responded, calling it a hostile and political act. Amazon to display tariff costs for consumers. Amazon doesn't want to shoulder the blame for the cost of President Donald Trump's trade war, so the e-commerce giant will soon show how much Trump's tariffs are adding to the price of each product, according to a person familiar with the plan. So that's what's going down. That in itself wouldn't really necessarily have a negative impact on the stock. They're just showing you more information. But what is clearly having a negative impact on the stock is that the administration is interpreting it to be a hostile and political act, as in you're making an enemy out of the most powerful person in the world. Generally not the smartest thing to do, but hey, I'm not the one running Amazon, so it's not really up to me. But that's exactly what's going on. So I guess they're worried that people will be thinking that it's going up and it's Amazon's fault, gouging them on price. I don't know. It seems like a very awkward misstep. It feels like a crazy awkward misstep. It would be something if it were like Alibaba, just because that's a Chinese-based company and they're just trying to, like, once again, I guess, protect their own government. But Amazon, obviously a US-based company, from a game theory standpoint, this feels like a really, really silly move. A really, really silly move for them to do that. But hey, like I said, they didn't ask me when making these decisions, so I don't know if my opinion on the matter really like matters at all, I suppose. But I just like it. Do you guys agree, disagree? Like, doesn't this feel like a really evident misstep from Amazon's side? I mean, the general public's not stupid. We know that when prices go up, they go up. Like, I don't think anyone's like, oh, Amazon's the one who's gouging us. It just seems like such an obvious misstep from them. But maybe I need to look a little bit more into the story. Like I said, this is actually my first time hearing of it, so maybe there's a bit more to the story than I'm appreciating or understanding. Obviously, that's possible, but this just seems like, or maybe they're using it as a tool. This might be a little bit conspiratorial, but what if they're intentionally trying to do something negative, and then in their earnings announcement, they announce a share buyback, and they're able to buy back their own shares cheap, and then all of a sudden, nope, we came to an agreement with the administration, and we're not going to do that anymore, and the stock goes right back up. I know that's tinfoil hat conspiracy. I fully understand, but like, that would be kind of a savage play to do it like that, wouldn't it? Of like intentionally manufacture some form of a drop so you can buy back your shares at a cheaper price. And then the thing that you did to manufacture the drop, you just say, oh, never mind, we're not doing that anymore. I don't know if it honestly might not be a political play. This might be a purely financial play, because I do want to remind everyone, they have a good relationship. Like, they do. Like, we saw Bezos at the inauguration. So we'll find out. We'll find out on Thursday. But if they actually end up announcing a share buyback and they're just manufacturing a quick little, I mean, instead of buying your own shares at 189, better to do it at 184. If you're buying billions of dollars, you're getting a lot more shares. Every little bit you can save, like, it's going to add up in the long run. That would be a savage play. And I want to be clear here. I have no evidence to suggest it. I'm honestly just thinking out loud. As I've said 5 times, this is like the first I've heard of this. Like, I'm literally just we're brainstorming here. I'm just bouncing on ideas off of you. But it just doesn't make sense. From a game theory standpoint, it seems like a weak play. From a relationship standpoint, we saw Bezos and his fiance, the astronaut space lady, they were at the inauguration. They had a good relationship. Why would you want to make an enemy out of the administration for a hostile political act? I'm reading tea leaves here, but it feels like something else is going on, rather than just like, oh, like, we want our consumers to know that we're not increasing the prices. Like, it feels like the story's a bit deeper. But like I said, maybe my tinfoil hat's on a little bit too tight this morning. I have no idea. Like, we're just ripping it. Maybe I've had too much coffee. Maybe I haven't had enough coffee. I don't know what the truth is. Maybe it's somewhere in the middle. But if this ends up getting announced on Thursday, I'll definitely seem like some sort of freaking genius. So I'd be stoked. I don't think you realize how much business Amazon does globally. I don't think you realize how much more than that the Trump administration could painfully hurt Amazon. Remember, it's still a U.S. company. You know all those tax credits they get? You know all those tax benefits they get? You know all those tariffs that could be raised on them individually? This argument of, oh, they're doing business globally. That business, like with the swipe of a pen, dude, Trump could make their life hell. So for you to think that the global business outweighs the amount of punishment the administration could put on them, it's not true. I mean, if you ever look into the tax benefits Amazon gets for their R&D and like that whole argument of they've never paid taxes, dude, that could go away overnight. Like literally overnight. So, and it's going to be in the tune of billions, but the billions of dollars a business do globally, if that's your argument of like, no, they are playing the political game because they're trying to make the outside of the nation's forces happier. Dude, that could go away like truly in the swipe of a pen, So I think we're talking about big dollars, but I think the big dollars of what Trump's punishment could be are bigger dollars than keeping outside of the U.S. consumers happy. It'll be interesting. I mean, obviously that just now makes it more interesting to listen to the earnings call after the market closes on Thursday of their commentary on it. But I swear, if it goes that way of, no, we're doing a share buyback and we're now no longer going to be having the price displayed, that's just a savage move. That's just a savage move. Huge dollars. All right. Very quickly, now that we've burned a lot of time before the market opens, what is this one? White House blasts Amazon over tariff cost report, hostile and political act, driving the stock down. If it's a stock buyback, that's going to be nuts. That futures are up more than 150 points ahead of big earnings. Well, if I reload this, S&P 500 futures decline as traders await trade deal progress. Amazon falls on White House comment. So during the commentary we got this morning, there was a little bit on this tariff talk. Trump to reduce impact of auto tariffs, according to the Commerce Secretary. Remember, the Commerce Secretary, Howard Lutnick, will be speaking at 2 p.m. today. We will be streaming it. Trump to soften blow to automotive tariffs after negotiations. Companies paying Trump's car tariffs won't also be charged for other levies. So kind of calming down. And actually, we had a good report out of GM this morning. Trump to offer auto tariffs reprieve after car maker appeals.
Kelly, all day long, we've been talking about the appearance of a de-escalation in this trade war with the comments by Scott Bessent a little bit earlier, comments by President Trump himself with regards to Jay Powell, and now this Financial Times story that we might be getting a walk back on the automotive tariffs?
Yeah, at the very least, a pullback on the margins, Romaine. What the Financial Times is reporting here is not a wholesale elimination on any tariffs that affect auto companies, but a bit of a reprieve when it comes to some of the specific strata of tariffs, if you will, that currently are affecting them, like the 20% tariff that has been levied on China specifically as it relates to fentanyl, as well as the 25% tariff that has been placed on steel and aluminum. According to the FT's reporting, the exemptions will leave in place the 25% tariff that Trump has imposed on all imports of autos into the United States, as well as the 25% levy on parts that is expected to take effect on May 3rd. So this isn't a complete elimination, if you will, of the tariffs that the industry has been grappling with, but does still grant them at least a partial win that they have been advocating for. So the president has made clear that he does want to have some flexibility, to use his language, when it comes to these tariffs, that he is willing to listen specifically to companies who come to him bearing feelings about this. That is applicable perhaps in the auto sector, but we're looking to technology as well, as he's made some suggestions that there could be talks with companies like Apple, for example, when it comes to some consumer electronics. As well as the retailers that he met with the White House earlier this week. Obviously, you're seeing some reprieve in the shares of these stocks. And I would point out, Romaine, roughly half an hour from now, the president is expected to sign executive order.
I should note on the back of that it was just announced in the press briefing this morning that tomorrow Trump will once again be meeting with a group of business leaders here in the U.S. So wouldn't be surprised if we have more deals from that. Now, the fun is not over today. I know the market hasn't opened yet, but I do want to remind you at 10 a.m. we are going to be getting the JOLTS job openings and the consumer confidence report. Once again, 10 a.m. as in 30 minutes into the trading day, or to put that another way, probably shouldn't be trading before 10 a.m. if you are a 0DT GBP trader, scalp trader, something like that, because at 10, we're obviously going to be seeing a little bit of a shock to the overall market. Might be bullish, might be bearish. I don't know which direction it's going to go. If I did know which direction it was going to go, I wouldn't be streaming. I wouldn't be doing this. I'd be some rich billionaire on a beach right now with a cocktail in my hand. I'd be enjoying the sun. So right here, just understand this is a 50-50 situation. Do not be surprised if we have a bit of volatility. And by a bit, I mean we could see a big jump, which actually would be a perfect time to pass your apex test. Remember, I do have a video of how you can easily pass these tests. Honestly, if you are struggling with passing apex, it is you just got to play the math of the situation a little bit better. And this is a perfect situation because they are the sponsor of today's stream. 80% off. I know recently they had a 90% off deal. I talked to one of the people I know at the company, and it is now going to be a corporate decision from them that they are now going to only rarely offer the 90% off, as in really our best situation from here on out is going to be 80%, which in comparison, the other one's going to be 71. So right now, if you're holding out for a 90% deal, not going to be happening anytime soon. This is going to be the best that we're going to be getting for a while. And right now, this deal does end in a day and 15 hours. So once again, use that code GOONIE pinned to the top of chat in the description of the video. You have to use that code GOONIE, GOONIE, when you are checking out in the coupon section to get the 80% off deal. And also, it's a one-day pass. And if I would argue, yes, this 10 a.m. announcement is going to be that perfect opportunity to do exactly the strategy I described in the how to pass the Apex eval video. So I do want to remind you that 10 a.m. we have some stuff going down. Tomorrow we get GDP and the PCE report. So there's a lot of stuff tomorrow morning at 8:30. And then I know it says 10 here. That is not right. It's at 8:30 tomorrow morning. Thursday, the first day of the new month, we're going to get some ISM numbers. And then Friday, the first Friday of a new month, we're going to be getting the unemployment report. And with all of that, we are still in earnings season. So obviously, based on the commentary this morning, Amazon just got a whole heck of a lot more exciting. That report's after the market closes on Thursday. Same with Apple, Riot, Airbnb, and Reddit earlier that day. Roblox, CVS, MasterCard, McDonald's. Tomorrow, we're going to get two other big boys, Microsoft and Meta. On top of that, Robinhood and Qualcomm. Earlier in the day, we're going to get Caterpillar. Today, after the market closes, Visa, Starbucks, Snapchat, and then this morning, we got a lot. SoFi, PayPal, UPS, JetBlue, Coca-Cola, Pfizer, Royal Caribbean, and Spotify. So let's quickly go over all of those. Coca-Cola tops earnings estimates, keep full-year outlook as it expects minimal tariff disruption. SoFi CEO says fintech bank is bringing back crypto investing. Pretty interesting. Pfizer expands cost cuts, tops quarterly profit estimates, even as sales fall. PayPal reports first quarter earning beat, maintains forecast. General Motors beats Wall Street's estimates, reassesses full year guidance amid auto tariffs. And then we also have UPS to cut 20,000 jobs on likely lower Amazon shipments. Profit beats estimates. And last but not least, Spotify. Spotify shares slip on profit miss, overshadows the subscriber gains. Now, remember, if you haven't already signed up for this, mattkohrs.locals.com, it is 100% free. You've never had to pay for it. You never will have to pay for it. My mod will put it in chat. It's in the description of the video. This is a free newsletter that comes to your email inbox every single Sunday. I break down the week, what to look forward to in the upcoming week. I give you a little cheat sheet of both the earnings and the major ones you should pay attention to, and also the major macroeconomic events. So, for example, today, 10 a.m., consumer confidence and JOLTS job openings, the stuff for tomorrow, Thursday, and Friday. And then most useful is the seasonality for each individual day. I would say right now, seasonality is probably less of a consideration than it would normally be, just because we're so headline driven, but still kind of important to pay attention to. Right now, over the past 27 years, we're about to start the day on Tuesday, April 29th. If you look at this day over the past 29 years, this is what your theoretical, your hypothetical equity curve would look like, and it's kind of neutral. There are some bullish years, there are some bearish years, so that's a roundabout way of saying I'm not really taking seasonality into consideration. Tomorrow is definitely a bit more bearish. Thursday, a bit more bullish, and Friday, a bit more neutral, maybe slightly leaning bullish. So I just want to give you all that. And before the market opens, I also want to show you the key levels of the day. So let me update this very quickly, and let me also go over to the GEX. So right now, we are scheduled to open at 5505, which is right above a key level. We are scheduled to open right here. The spot price is roughly 5505, right where my cursor is, on top of the transition zone. If the market can hold above 5,500, that is bullish. Obviously, this transition zone is exactly that. It's a transition zone both for gamma and for delta, and then below it is where the bears start to gain control. If we could hold 5,500, then I'd be targeting 5.5, kind of 2.530, somewhere right around the close, like that test of the red to green move. And then from there, we have a lot of action at 5,500. And please don't forget that we have this upside gap fill at 5.572. That would be the bull case scenario. The red, the green, and the white are yesterday's low, high, and close. The yellow lines are the key open interest levels, as in we see a lot of action, whether in open interest or in terms of volume at those strike prices for the 0 DTE. And then the white box is where we see the gamma and the delta on the 0 DTE actually switch on the day, which is going to have an influence on how the market makers behave, which is going to have an influence of who's in control, either the bulls or the bears. So once again, the TLDR is this: bullish up here, bearish down here, transition in here, and then these are the key levels, whether it's high, lows, and closes, open interest, or even gap fills. Those are the major levels that I'll personally be watching out of the gate. Taking a step back to look at the daily chart, bulls are in control. We've had 5 green days in a row, higher highs, higher lows. I am still looking for this fill of the upside gap fill from the low on Wednesday, April the 2nd. As of right now, we were looking a lot more bullish this morning than we had that press conference that people were excited about, and then we got really no news on it, and then we got a little bit of a hit. So at this point, I'm pretty much neutral. I will not be doing anything until past that 10 a.m. announcement. Remember, we get the JOLTS job openings and the consumer confidence at 10 a.m. today. I don't think that there's really a statistical advantage to doing anything before that. Now, if you want to trade before that and you're feeling lucky, I wish you the best of luck, but understand that you are pretty much flipping a quarter. You're just flipping a quarter. So if you're feeling lucky, I hope you crush it. I don't want anyone to lose money, but please understand that at 10 a.m., there's going to be some stuff going down. Dingity ding ding ding. The world's largest casino is now open. Best of luck to all. Play responsibly, and if not, have fun. It's just money. If the Fed can just print it, why can't we? It's not like it matters. You're not going to take it with you when you go, so you might as well enjoy a little bit of the fun now, but my personal plan is really to not do much. Recently, I've been trying to be a bit more disciplined and waiting till past 10 a.m. And even before, I was trying to be new and reformed disciplined, Matt. On days like today, I'd be waiting for 10 a.m. anyway, just because of the JOLTS job openings and also that consumer confidence report. So going to be pretty important. So patience, patience, patience. Of course, we'll be able to review this. Obviously, quite a bit of support at 5,450. There's a clear positive gamma node right there. We also have a positive gamma node at 5,500. If you're buying that bounce right off of this 5,500, that's kind of a smart move. You're buying at support. If you can do so with minimal risk, hey, have at it. Like, I'm not your mom. Do what you want, but we're seeing a bit of a pop up here. All those plays disappeared. So if we do bounce, there's really nothing stopping us all the way up to 5,550. Obviously, throughout the day, we're going to be looking at the options flow. Let me quickly reload this. Let me get rid of this. Let me go over here, just kind of setting up on the day. Here's a look at the options flow. This is from Spot Gamma. If you haven't seen this tool before, Spot Gamma is by far the best options analytic tool in the game. By far, no questions asked. I've used all the products before. What you see on the screen right now from Spot Gamma, this is their hero tool. They have a ton of tools. This is the best options analytic tool in the game. The second place is so incredibly far away. Regardless, the white line is the price line of the S&P 500. The teal green line is the 0 DTE delta, and the purple line is going to be more of the all expiration. So it's the 0 DTE and all the other expiration dates put together. So once again, on the left side here, you have price. On the right side, you have delta. What you need to really know, if you're unfamiliar with this tool, is that when the delta goes up, that's bullish. That can happen by calls being purchased or puts being sold. If the delta drops, that is bearish. That can happen by calls being sold or puts being bought. And sometimes you see just one of the sides move. Sometimes you see both of it. And that's right here why I have total. I'm putting the delta together. You can always toggle and see the calls and the puts separately. The green and the orange are calls. The light blue and the dark blue are the puts. So right here, I see calls being sold. I see puts actually also being sold. So it's kind of netting out to a whole bunch of nothing thus far. People are just dumping their positions. Market going up a little bit. Amazon is up. MSTR is up. Palantir, Tesla, and MicroStrategy are kind of the three major popular tech names recently leading the market higher. But also a special shout out to Netflix, which has been absolutely crushing. Absolutely crushing. So special shout out to those larger boys. I know there's other stocks going more, but at a certain point, you also have to consider market cap. And sometimes if you have a small stock absolutely ripping, it's not going to have an impact on the overall market. Well, if you have something like Tesla and Netflix ripping, well, based on their market cap, there could be a legit impact on the S&P 500, on the NASDAQ 100, kind of gives you a barometer of just like overall sentiment in the market. So just wanted to kind of call those out, and that's why we're watching them. We recently have been seeing semiconductors doing pretty well. They're slightly red this morning, nothing too crazy, but the interesting equity news of the day is Amazon, which if you missed it, if you're just joining in right now, first of all, demerit, you are late to the show, but hey, I'm in a good mood, so I'm going to explain to you what's going on anyway. Early this morning at 8:30 a.m., an hour before the market opened, there was a White House press conference, a briefing, and in that, it was, I guess, announced today that Amazon's going to be showing the tariff impact on price of all their products. And they were asked about that in the press briefing, and the administration took the stance of this is a hostile political talk, and that's why Amazon is getting clocked this morning. In fact, it's recovering a little bit right now, but it is down 1.4%, and the pre-market a bit more scary, obviously just making an enemy, in my opinion, out of the most powerful person in the world. And I think it's no secret that the president can definitely be a little bit vindictive, and he doesn't really seem to forget that easily. So just something to call out, something to consider. But let's just wait and see how things open up. Like I said, if we can hold 5,500, that's the bulls are in control up here. I would not be taking a random bearish position at this point. Even in the chop zone, that's pretty tough. It's actually really tough. So the bearish play is all the way down here, sub 5,465, even better, sub 5,450. And the reason I'm saying that is we could see on the trace tool, let me move myself up here. You could see there's a lot of positive gamma support at 5,450. So trying to short right above that, you're basically shorting right above support. So it might only go a little bit and bounce and then destroy your play. So just be careful because there's quite a bit of support. I mean, literally, I'm showing it to you right now. The biggest support like node of the day is at 5,450. And so I would be very, very careful on a short-term basis of trying to short it right above that and then saying, yeah, it's totally going to break that because it's just support. And when it comes to support and resistance, you don't know if it's going to hold or not hold. So definitely be careful. Just be careful. My personal bias on the day is definitely a bullish one just because of what I'm seeing in the option chain. But I'll be the first to admit that the 5-minute and the 10-minute and the 30-minute being bearish are not so bueno. So right now, price momentum on 3 of the 4 time frames, it is favoring the bears. The 5-minute, the 10-minute, and the 30-minute are all below their EMAs. The 5-minute, the 10-minute, and the 30-minute also on the NASDAQ are below their EMAs. Earlier this morning around 8:30 when we were pumping, we were on the green side, and of course this could recover, but that one is not really in alignment with what we're seeing going on in the options market. So a little bit of a mismatch there between price momentum and between what we're seeing in option structure. But with respect to that, we should probably look at options flow and see how that's playing out today. As of right now, options flow, it pumped until about 933 and we're dipping a bit in the S&P 500. Same thing on the Mag 7. We pumped until about 933, dipping a little bit there. And then finally looking at price, price isn't doing anything. Price popped and now we're just kind of going sideways. So folks, it's a waiting game. Right now, we're seeing a mismatch of information. Momentum is bearish. Option structure is bullish. Options flow is bearish. And price is literally neutral, not doing anything. So we're seeing the various important measures of structure, momentum, and flow. They're seemingly at odds with each other, which is another reason to not be trading right now, on the top of the fact that you probably shouldn't be trading right before a major announcement anyway, because it's a 50-50 shot. So those major announcements, the JOLTS job openings and the consumer confidence coming out at 10 a.m. today, which means we have about another 22-ish minutes to see what in the world is going on there. So patience, folks. Patience. I think that's the major thing. The major thing we got to consider is patience is key. Patience. All right. Well, while we're waiting for that to play out, Hang on one second. Why can I not see all of chat? What in the world is going on? Hold tight. I was going to say, tell me what in the world is up. But, okay, now you guys are back. Well, while we are waiting this, first of all, if you are looking for that 50-50 opportunity to easily pass the Apex test, I would very much argue that this upcoming event, as in what we have at 10 a.m., is a high odds event to pass that, to do the 50-50 technique. If you don't know what I'm talking about, I made an entire video on it. It's in the description of the video, but many of you do know what I'm talking about. And I would say that the vol expected at this 10 a.m. announcement is going to be enough to do that classic 50-50 technique. And right now you can get the accounts for pretty cheap. It is 80% off, which means that test will cost you about $33 if you use that code Goonie, pinned to the top of chat in the description on the video. And actually, let me switch this up over here. I just want to show you, I have not traded yet today. I haven't traded on Apex. I haven't traded on Take Profit. You guys, if you were here yesterday, you knew my accounts starting off the day yesterday were at 56,000, as in I had $6,000 in profit. Day one, I made 3K. Day two, I made 3K. That's my 6K in total. Well, day three was yesterday. And as you can see, I lost about 1.7, 1.8. It was not a good day for me yesterday. When I left you guys, I was down about 2K, maybe 2.5. Then it got worse because I had two more losses, and my losses got up to 4K in each account. So all my accounts were actually at 52. And then I was able to couch part of the pump at the end of the day, which cut my loss in more than half. So that's why I'm right now at 54.3. So what you are witnessing right now in real time is the day 4 of the accounts. So thus far, I have 2 winning days. I have 1 losing day, and this is day 4. So we're going to see how things either do or don't go. But that's kind of where I'm at in my life. So no trades yet. And obviously, I will be waiting for posts that, ooh, we got a little bit of a pop there. How's the flow looking? The SPY flow just started to pop. The Mag 7 flow is turning around, but it's also bouncing off the low of the day. So be a little bit careful, but I really do like the market, that the market is holding this transition level. The low of the day is 5505. We know 5,500 is a major level. At this point, it seems like a relatively easy play to play the upside gap fill to yesterday's close at 5528, 5529. You have about 10 points of room right there. It seems like that's going to be an easy play. It's not going to be a play that I'm taking advantage of because, once again, I do not want to trade before those 10 a.m. announcements. But if for some reason you're already in a position, it looks like this is kind of a slam dunk of a situation up to 5528, 5529. But I want to be very, very clear. I am personally not playing it because I'm attempting to be a bit more disciplined and not break my rules. And I would also love for the 5-minute, 10-minute, and 30-minute to get on the bullish side, the green side of these EMA clouds. So I don't necessarily want to break one of my newest trading rules of trading before those announcements. I also don't want to break my other trading rule of going counter trend. These are all bearish, so I'd rather wait for the market to prove to me that it's actually in a bullish mood this morning. And to be fair, we are pumping. We just need to pump a little bit more for me to be like, oh, okay, I'm actually interested in taking advantage of this. So we're going to just keep watching options flow. We do have a little bit of time to kill. Looks like the SPY just bounced off a new delta low to go to a new delta high. The Mag 7 bouncing off the delta low and maybe recovering about half of this. Let me check out this other thing. What do we have going on right now? Why is this not loading? Man, nothing's loading for me on time today. That's a bit crazy. That's a bit crazy. Hey, that's a wee bit crazy, but I guess it just is what it is. I'm not the biggest fan of that though. Like, come on, dude. Let's see what's going on. Amazon attempting to recover a little bit. MSTR is green. That's one of the few green things on my watch list. Coin is green, 2 of the crypto related things. Not the craziest thing because Bitcoin is holding nicely at 95,000. VIX is slightly up today, but on that pump, the VIX is coming down a wee bit. So other than that, it's a waiting game. It is a waiting game. A 10 a.m. Brian is calling for a 10 a.m. rug pull. Who here agrees with Brian that at 10 a.m. we will be getting a rug pull? 10 a.m. And then also on that note, who disagrees with Brian and thinks that at 10 a.m. we are going to be getting the opposite of a rug pull and maybe a rug push, which I don't think is technically the name, but it's probably worthwhile to consider. Yep, smart. Trex, I had hickory smoked last night. Well, that doesn't feel like it's about the market. Bounce, nah, agree, we will see. SPX 2.0 today. I don't know about that. Hey, it's possible, but I have a feeling that it's not going to happen because as soon as we drop the old 20%, we would most likely just get the market would turn off for the remainder of the day. So it would have to take something truly cataclysmic for the SPY to go to zero today. But hey, we're going to see how it plays out. A rug push, a rug pull with my dead cat on incoming rug pull, disagree. Well, if you guys want, we could definitively find out before it happens. It's been a hot minute since I've guaranteed you guys which way the market goes, like the old MK, like 100% financial guarantee. Recently, we've been trying to like actually trade and guess, but if you guys want, I would be willing to definitively tell you what's going on. So, you know what? I am in a good mood, so we're going to do it. We're gonna rip it with the Wheel of Destiny. Folks, it's been a couple months since I've broken this bad boy out. So for those of you who are new, welcome to the WOD, the Wheel of Destiny. This little tool here is imbued with magic from outside of our universal dimension. It is something about it is literally has the ability of something that is not from this planet. It is not from this universe. And due to that high magic level, it actually has 100% accuracy in the market. It's never missed and it can't miss. It's like actually the only tool in our solar system that can accurately tell you what's going on in the market every single day. So with that, obviously red is bearish, black is bullish. We're in the black, green, that type of a thing. And every single day, a little hypnosis in the middle, it can tell us exactly where it's going to be going. So if you guys are curious of how this 10 a.m. announcement is going to play off, I'll give you the answer. And ideally, we just all make infinite wealth. So ready? 3, 2, 1. And we're letting it rip. Bulls are bears. Bullers are bears. Wheel of Destiny. Wheel of Destiny. Oh, bullish. Boom. Guaranteed. That is the old MK financial guarantee that it's going to be bullish. We're going to have a bullish day without a doubt. I mean, you just heard it. You heard it there. I don't even know what to tell you guys, but it is definitive. It is locked in. I'm sorry for you, Brian, who is apparently, I'm sorry for everyone who's betting on a rug pull, but apparently we're just not going to be getting a rug pull. It's simply not going to be occurring today. So if you're betting on that, remember, don't shoot the messenger. I am simply the person who is telling you what the wheel is telling me. I am not the one who decided it or anything like that. So don't get angry at me. And if anything, I'm giving you the forewarning that this is the opportunity for you to make money. No, jolts will be bad. Apparently not. Or even if they are bad, apparently the market's just simply not going to care is, I guess, my major information for all of you. Because, I don't know, the wheel knows something that we don't know, and I'm not going to be fighting it. I am 100% not going to be fighting it. So it doesn't matter if we're apparently on the bearish side of things. Well, we're going bullish right now. Thus far, the wheel seems to know what's up. So, I mean, I know you guys think I might be kidding or something, but the wheel's literally never been wrong. I mean, I just told you bullish. And since then, we've gone from 549.50 up $1.50. We're actually getting that test of the red to green test right now in real time. So you guys might think it's crazy, but I mean, no one's really laughing. We're chuckling at the major gains being made, if anything. So just want to put it out there. Just want to put it out there. Don't get mad at me. How many of us degenerate put a 0 day on the wheel of the WAD? It's the WOD, Wheel of Destiny. Of is spelled OF, not AF. I know that's a little confusing. I know we weren't all hooked on phonics as a child the way my parents made me be, but Wheel of Destiny of OF is not spelled AF. They're both vowels though, so you're almost there. Like they are O and A are both value, but like I would, if we round up, you're right. They're both vowels, so like I would say it's close enough. Like we all knew what you were talking about, you know. And we're generous here. We round up. That's the nice thing for us to do, you know. The nice thing for us to do. YOLO options on results. Only if you want to make a lot of money. Matt, you can't stop. I can't stop what? Wheel of Destiny, UV. Kids today are hooked on Adderall, not phonics. I'm hooked on the Lord, you know? Just Jesus of Nazareth. Just completely filling up my heart these days. If the Wheel of Destiny fails, is it then the Wheel of Debt? It doesn't really matter because that hypothetical is actually impossible. It's outlawed. It's illegal. Not just in this country, but actually on a global level. It is. Folks, you know how many high-level institutions watch this show? I mean, I guess we could pontificate upon that if it were to fail, but it's actually impossible. It's the odds of it failing are actually sub-zero. There's a -% chance of it not being right. So like we could talk about it, but at a certain point, are we just wasting our time? Are we just wasting our time? Anyway, as I called out, we had that push right up to the red to green move, and we're slowing down because a lot of traders, manual traders, and bots do react to the red green move, and we just got a pop above it. So kind of watching this, my next target would be all the way up here at 5,550. If this does not hold and we get rejected, I'd be looking back down for a push to either 5,510 or 5,500 flat, somewhere in this 10-point region. So we're at a key level. I don't know if we break out or not. I can't tell you. I don't know if it's going to happen now, in a minute, whatever. All I could tell you is if we get a bullish breakout, my next target's all the way up here at 5,550. If we get a bearish rejection, then I'd be targeting the 10-point region between 5,510 and 5,500 flat. And right now we're just kind of waiting. I'll show you options flow. The Mag 7 is recovering. Nice linear push to the upside. And obviously things were a bit bearish until about 9:40, and then seemingly 10 minutes into the trading day, we're now seeing a bit more optimism, a wee bit more optimism. So let's just see if this party is going to be continuing. Let's see if the party is continuing. 5-minute and 10-minute and 30-minute are all attempting to go bullish. 5-minute, 10-minute, and 30-minute are all attempting to go bullish. So let's just wait. The 30-minute is kind of the one I really care about right here. And I'm curious if this push will actually be able to hold, because that would be a nice recovery. We're going from red to green. We're seeing nice options flow back to the upside. Yeah, we got beat up for about the first 8 to 10 minutes, but that's a pretty decent recovery. The bulls are still proving themselves. They defended 5,500. They're actually defending this green move. If we could hold here, potentially an easy play all the way up to 5,550. But I cannot stress this enough, especially if you're just joining the show right now. We have some pretty important, pivotal, impactful announcements coming out at 10 a.m. So I am not doing, like, at this point, you just have to have a little bit of patience to wait the next 9 minutes. It's one thing if you were front running it all the way back here at 9:40 and you're like, you know what, I'm going to be out in 20 minutes anyway, like not trying to play it, and you went long and you're risking that recent low, and obviously it played off very, very nicely. But in terms of, like, should you be chasing the intraday high now right before announcements come out? That's like pure degen trading. And if that's your style, hey, have at it. But then for those of you who might want to have a little bit more of longevity in this game of trading, you might just want to have a bit more patience, a wee bit more patience, if you will. News, China headline, Reuters waiving U.S. tariffs. What? China waives tariffs on U.S. ethane imports. So it's not on all tariffs. That's a little bit bombastic of you to say. It is on U.S. ethane, which is way, way different than what you just said of waiving tariffs. Eddie, you got to chill. News, China headline, Reuters waiving U.S. tariffs. That is a completely different deal than what is actually happening. China waives tariffs on U.S. ethane imports. It's on one specific thing. So, like, let's just chill there. Those are two Massively different things. Massively different things. If China completely waived all tariffs, we would have another record-breaking gain day. Another, like, truly, like, we'd be up 10% and we would just rip and rip and rip. But just doing it on ethane, it's it's definitely bullish. It's another extension of an olive branch, if you will. But that is just a dollar value. From a dollar value standpoint, those are two very, very different things. Very, very different things. Matt, the news will help is guess the bottom is? It depends what the news is. All I can tell you is that there's a news event in 6 or 7 minutes. And as we're waiting for that, once again, you still do have time. If you're trying to do that 50-50 technique to pass some Apex tests, right now you could get 80% off on Apex. They are the partner of today's show. That's exactly what I'm trading on with about $1 million worth of capital right here. That one and Take Profit, those are my two favorite futures ones. And then for options, I use Vanquish. But right now, Apex has a pretty nice deal, 80% off. Don't forget to use that code DUTY. And like I said, if you are quick, you have about 6 minutes to get those accounts and try to play this 10 a.m. announcement. And if you choose to do that, obviously, I wish you the best of luck. Is it a guarantee? No, but it's the technique I use that seems to have the highest likelihood of me actually being successful. So we'll see. Did China randomly decide this, or do you think they had some communication back and forth on what they will do? I don't know. So the Treasury Secretary this morning was really cagey about that. Like, one of the reporters asked Scott Bessent, hey, we know you're talking to China. Are you specifically talking to China about the trade deal right now? And he's like, I can't comment. I'm not here to comment on that. It was like weird because you would think he would just say, yeah, if they were. And that would once again remove some of the uncertainty, and it would probably bring legit stability to the market. And he didn't do it. But then yet, if they're not talking, why are both sides still continually trying to offer the other side olive branches? So I'm a little bit torn on it. If I were a betting man, which I am, I think based off the commentary from them this morning, I believe that the U.S. and China are talking. Are they directly talking about the trade war? I don't think so. I think Bessent would have taken advantage of that, the press briefing this morning, to be like, yes, we are talking. And he didn't do that, which I think is weird. Matt, do you know what breadth thrust is? Wall Street said if history is a guide, the next few months could deliver double-digit gains for S&P 500, potentially making a move to 6,000 by end of year. I do know what it is. I've used it before, but I'm curious why so many people are bringing it up today. Was there some sort of article? Very, very rare that, I mean, it's not obscure, but it's not the most common indicator by any means. Why are so many people asking about it today? Did you guys all read the same X post or something? The fact that multiple people are bringing it up tells me that you guys all had to read something either last night or this morning, and now you think it's like the new shiny toy that is amazing. It's a fine tool like any other indicator in this world. There's times it works well. You could find counterexamples to it not working. So there's no individual indicator that is perfect. If there were a perfect indicator, the person who found it would be a billionaire and they would have never released it to the public. There's no such thing as just free, unlimited money with never missing. It just does not exist in the market. But what's more interesting than that, which is not really different than anything I've told you guys in the past, is this is now the third or fourth message about it today, which tells me that something either had to get posted last night or this morning about it. It's because the thrust gave a rare signal. But once again, that means its statistical validity is less. Remember, with less data points, something is statistically less confident. That's if you're this in the market's only fired 4 times and it was perfect every time, that means you only have 4 data points, as in not statistically significant. If you were to flip a quarter 2 times and it lands on heads both times, and you're like, look, it always lands on heads. Well, no, you only have 2 data points, so you can't really draw from that a high statistical confidence of what it does or doesn't do. That could happen 25% of the time, and yet you're pulling the wrong extrapolation from it. You're pulling the wrong conclusion from it if you look at it that way. So this idea that it's rare, as in it doesn't fire that often, that doesn't necessarily make it a good thing. It doesn't make it a good thing at all. And that's just a basic stats axiom of if you only have a small amount of data, how can you be that confident in what you are like pulling from that data set? It doesn't make sense. All right. So be careful if people are using that. I think there's I guess in my own opinion, and we're now talking about more of the medium time frame stuff, I think there's a real chance that the SPX in the next month, 2 months, 3 months pops up to 5,800. And then I think from there we turn. I think by the time we get to the end of the year, things are going to get pretty painful. Maybe early 2026, but I think sometime between late this calendar year or early next calendar year, I think we're going to have an additional sell-off that's actually going to be larger than the sell-off we just had, percentage-wise. I think we're going to get hit pretty hard. And this has nothing to do with the administration. It doesn't matter if it was Trump or Harris in control. I think this is eventually you have to pay the piper from printing so much money in 2020 and 2021. That is not something that you could do to an economy and not have repercussions. And it seems as if we are starting to see the early signs right now that bill is coming. So once again, this is not political commentary. If anything, it's monetary policy commentary from about 4 to 5 years ago. And I think the bill is coming due. So I want to be clear that this bounce that we're seeing out of the market, I am not of the opinion that the bottom is in and we have another multi-year bull rally from here. I think there's another legitimate sell-off either at the end of this year, early 2026. And it's in that sell-off that I think we're going to see truly a generational buying opportunity. With that being said, I should be fair and honest that I did. All right, report coming out. Initial reaction to the downside. Is it going to hold? Is it going to hold? All right, let's see what CNBC has to say about, let's see what CNBC has to say about this. The report just came out, initial flush to the downside, but it's already being purchased back up. All right, let's see what they have to say. All right, the numbers are out though, so we can just quickly check them. Quickly. What do we have here? Consumer confidence coming in at 86. The expectation was 87.7. JOLTS job openings, the expectation was 7.49 million, coming in at 7.19. So both are less than expected. This isn't necessarily bearish. It's bad for the economy. But remember, we're kind of in that upside down where bad economic signs might be putting more pressure on the Fed to lower the Fed fund rate, improve monetary policy, which would then be good for the old equity market. So don't necessarily, just because you saw those red numbers, don't be like, oh, that has to be bearish. Because sometimes the economy and monetary policy in the stock market are all on different pages. But let's see what they have to say about it.
Welcome to Squawk on the Street. I'm Sarah Eisen with Carl Quintanilla and David Faber, live as always from Post 9 of the New York Stock Exchange. Stocks, little changed. We're down a little bit in the S&P 500, but there's strength in groups like real estate, materials, information technology higher, utilities up as well. The Dow, 119 points up. The NASDAQ down about 0.25%. It's all about earnings. Fed's in quiet period, remember. We'll get some more economic data later in the week as well to chew on. Take a look at Treasuries right now, and we'll get some more this morning as well. JOLTS and consumer data. 10-year yield, 4.185%. So there's buying of treasuries. Yields are a little bit lower. 2-year yield also lower at 3.66.
Let's get some conference board and JOLTS with Rick Santelli. Hey, Rick.
Yes, and do watch yields moving down. 10-year yields below yesterday's lows. Now let's get to the data. Consumer confidence is the reason. These are April numbers, expecting a headline number of 88. We come in at 86.0.
Our boy Rick.
April of
Rick.
2020. And if you look at present situation, 133.5. This is the best out of the three. This is only the weakest since SEP of 24. And if we look at expectations, 54.4. You have to go all the way back to October of 2011 to find a lower number on confidence. You know, many were wondering what was cross-fertilizing what. Equities were looking really green. Interest rates moving down, fertilizing the equities. But
Order
maybe
submitted.
the interest rates moving down has more to do with slowness.
But I do caution, these confidence numbers can be a bit squishy, and the uncertainty could have an overdramatic effect on it. Now let's look at job openings and labor turnover, known as JOLTS. This is for March, expecting a number around 7.5 million. We come in light, 7,192,000, smallest job opening level since SEP of 24. As we continue to watch yields move down and a slight reversal on the green in equities, but still on the Dow at least, some pretty deep green. David, back to you.
Okay, Rick, thank you. Rick Santelli. Treasury Secretary Scott Bessent was speaking at the White House this morning. Of course, as you might imagine, a lot of the focus was on tariffs. Megan Casella, she's at the White House and has some of the highlights for us. Megan?
Trend line breakout on the SPY and on the Qs. Well, the SPY's testing. The Qs actually broke.
From the Treasury Secretary at the White House here this morning, one piece that is moving
like I said, if we can break and hold here,
the White House responding to
my first target is all the way up at 5,550, a 20-point gain in SPX.
Exactly how much of the price tag is due to tariffs. Take a listen here to the White House's response.
Oh, dude, they were pissed. This is why Amazon got hit.
I will not speak to the president's relationships with Jeff Bezos, but I will tell you that this is certainly a hostile and political action by Amazon.
Now, Bessent did not want to offer any specific timeline as far as what to expect on trade negotiations. He was asked about that several times. He did highlight substantial progress, he said, with 3 countries, that's South Korea, Japan, and India, previewing some more to expect on that front. And while he didn't want to comment directly on this question we've been asking for days about whether President Trump and President Xi have been in touch specifically about tariffs, he did say this. Take a listen.
Over the next couple of weeks, as I said, we have 18 important trading relationships. We'll put China to the side. 17, they are in motion.
Almost saying the quiet part out loud there. 17 are in motion, with one we can assume put to the side is not yet in motion, and that's China. Finally, guys, I did get a chance to ask the Secretary if he could detail for us just what to expect on the auto tariff relief front, which we are expecting to hear more about later today. He would not give us those specific
Q's new
details,
intraday high after the trend line breakout.
Result, he said, of the president's meeting with both domestic and foreign auto
SPY
producers,
going for the new intraday high. Seems like a pretty fucking
afternoon.
easy play
Guys,
up here.
Megan, good to hear that the trade deals and talks are in motion.
Pump.
Is the best case scenario here that if they reach a deal, we get to 10% still higher tariffs on everyone else? Because that's where we are right now. And there were higher rates announced, but the grace period until they make deals went away. So what, is that what investors should expect if those deals are made? Still 10%?
Exactly. That's what we've been told so far. Kevin Hassett on our air said a few weeks ago he would be very surprised. It would be a very big deal if that 10% baseline tariff ever comes off. So this is about those higher tariffs that are now on pause. The other thing to keep in mind, and that investors need to keep in mind, Sarah, is that these are going to be agreements in principle or memoranda of understanding.
All right, this one's getting a little bit boring.
Has told us that
Obviously, on that trend line breakout, you guys heard me go long. I am long at, 537. Lotto ticket play. I'm up $800 per account. I'm doing it on 25 accounts. Things are looking good. The max profit I could go for today is $3K. That's not necessarily what I'm going to go for. I'm more of trend following, but I cannot stress this enough. I deeply, deeply believe that if you're attempting to be successful on Apex, on Take Profit, on any of this sim-defunded stuff, I believe, and whatever, maybe you take your opinions from someone else here, the best way to do it is a lot of lottery ticket plays. You have to have that mindset of, okay, cool, I'm long, goes a little bit in your favor, and your stop's in there. Because we don't know when random news might come out that might be an adverse movement for you. So because of the heightened volatility and just chaos of the situation, I put my stop at break even as soon as I reasonably can, and then it's a lotto ticket play. Of course, I want it to go and go and go, and I can make money, and it doesn't happen. In fact, that happens less frequently, but in the long term, it's worth it because of the asymmetric aspect. So there's a high percentage of the time, more than 50% of the time, that it comes back and clocks me and I get nothing for my effort. But every so often, you do truly catch a trend and you're able to ride it. And then in my case, I'd be able to lock in my max profit of about 3K. So I just want to be clear here. I don't know if this one's going to work. I'm on the right side of the trend. Options flow is up. Option structure is bullish. Price is up. And then we also have momentum is on the bullish side. So 4 of the things that I really, really care about are all pointing bullish. I am attempting to follow this trend. Do I know what the trend's going to be? No. But what I can tell you is the Wheel of Destiny told me to be bullish today. The Wheel of Destiny told me to be bullish. So whether you do or don't believe in option structure, options flow, price momentum, or price structure, maybe that to you is just kind of some random, like practical magic, Harry Potter-esque BS. Like, I get that. But the one thing that I think we could all be in agreement on is that the Wheel of Destiny, it's not wrong. It should not be questioned. So that's exactly what I did. That's 100% not what I did. Hope it does not work. Well, that's not super nice of you to say. That's really not why would you say that? Hit the like button. This man gives us transparency like no other YouTubers won't. Yeah, and you get even more than you want if you look at the OnlyFans. Always go the way of the Wheel of Destiny. Oh yeah, you can't bet against it. You can't bet against it. So one thing that is going through my mind, just to talk through my trades out loud with all of you, is yesterday I did get hit by about 1.7, 1.8K. Because remember, yesterday my account started at 56, and then today they started at like 54.2, 54.3. Part of me would think that it might be nice, even if I see that, just to bring myself back to 56, because like just kind of trying to dig out a little bit of a hole that I'm in. So that is partially in my mind, but hopefully, I don't know, hopefully it doesn't get tested. Sometimes the psychology of playing with lotto tickets, the way I refer to it, the MK lotto ticket system, it can be tough on your psychology because more often than not, you are stopped out for break even. So I'm not saying from a psychology standpoint, it's necessarily easy for everyone. If you have a psychology that it just doesn't do well with that, of like, dude, I was up and then just break even. Like I said, more often than not, you see your accounts go green and then it ends up being a nothing trade. So that style of trading can have an adverse impact on some people's psychology. So maybe you're a person whose psychology doesn't really work well with that, and you might need to be considering a slightly different system. For me, it works well because it's what got me $250,000 in payouts from Apex from December till March. So when I see the money come into my bank account, it does enough to kind of assuage my other psychology hits of like, dude, I don't want to go up and then see it go away. Like, of course. So at first it is painful, but then when you see the money start to flow in and you get those wire payments from Apex into your account, all of a sudden, and you're like, okay, this is the process and this is how the process works. I'm the true sausage king of Chicago. Congrats on that, Abe. Congrats on being the true sausage king. I'm not really necessarily sure if that was in question, but you seem pretty hell-bent on the world knowing that you are the true sausage king of Chicago, which really does bring up the other interesting concept of the fact that, does that mean that there's a fake sausage king? Are there multiple people vying for the power of being like the Lord of Sausage in the Chicago area? I think if anything, your commentary is bringing up a lot more questions than it is answers at this point. That's bringing up a lot of questions there. All right, I'm going to remark out this high. I'm going to remark out the new high. And then also, I would love if we could stop with this freaking sell-off. I would love if we could stop. I really like that pump. And then all of a sudden, we have some profit taking going on into this pump. And it seems like this might, remember when I said, more often than not, I get clocked. Oh, am I feeling lucky? Am I feeling unlucky? Am I have to re-enter? Do I just want to take some of this money while it's good and give myself a bit of a buffer? Do I really think it's going to clock me, or do I think it's going to turn around? Ooh, it's kind of in the market god's hands at this point, if I'm being completely honest. I'm just hoping maybe it can find support at 50. That's a painful hit. We got clocked exactly at 600, and we're now knocked down in excess of 50 points, and I'm right here at 37. Maybe I'll get lucky. I was not getting lucky yesterday. Not getting lucky. These NPCs in chat are laughable. I agree. I'm sure there's people in chat. Why didn't you get out here? Why didn't you get out at the exact perfect value? Well, this might surprise you. It's because I didn't know it was the exact perfect value. some of the commentary in the live stream trading space is insane. Why didn't you get in at the exact bottom? Why didn't you get out at the exact top? Because no one knows if it's the exact bottom or the exact top. It's so silly. You don't know if the trend's going to reverse, continue. You just don't know. You don't know if there's an announcement from some company. You don't know if there's Amazon's getting into a pissing political match with the administration. You don't know if the administration's going to say something. You don't know if there's a random update from Bill Ackman, some influential dude. You just don't know. There's so many unknowns in the system that you just don't know. Why don't you get out now? I'm hoping the trend continues. All I can tell you is I have no risk. It's a lotto ticket. The worst case situation for me is I'm at exactly where I started the day. The best case situation is I make $75,000 or some other unknown amount of money. Why didn't you top ticket? I wish I did. That's actually the plan for tomorrow. On Wednesdays is the day that I trade perfectly. You have to remember that. That's the goal for Wednesday's show. That's specific to Wednesday's show is, trade perfectly that day. Potential little trend line breakout here. Right here, recapturing the EMA, little trend line break. Maybe I'm seeing things. I could probably move my risk up to this level. Probably should. Guarantees myself a little bit of money. I'm just targeting that recent low. Hoping, well, actually, maybe you want to watch this trend line. That's the trend line break. That's probably useful to watch. Pushing above that, you would, if you take that breakout trade, which obviously that would be the entry trigger, is a push and a hold above this. Your risk would be this recent low, which is actually where my current risk is. So my stop order is in the money. So I'm definitely making money on this play. Definitely making a chunk of change, if you will. The old chunk of change. The old chunk of change. All right. Come on. Break and go. 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 Show me that money. Show me the money. Show me the money. Breakout. 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 Go. 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 Do it. Do it. Do it. Go. Go. For America. For America. Don't get rejected there. Come on, just take out 80. If we can take and hold out 80, and even if we want to dance around at 600, I'm cool with that. But this, it's dancing around a little bit too close to my value, and I'm not the biggest fan. Wednesdays from 10:27 to 10:34, Matt's perfect. Like that's my time to shine. I get that. What? You're giving me a 7-minute window one day of the week, and that's when I'm just lights out. Is this a lower high? This is definitely a higher low, but if we have a higher low and a lower high, that is a consolidation. And it doesn't necessarily make me feel the best because it might be coming for me. Doesn't necessarily make me feel the best. No, stop it. Stop it.
Order canceled.
All right. Well, it came for me, but I made some money. So I made about $3,000 there, I suppose. I made $150 on 25 accounts. So $3,000 locked in, giving myself a little bit of a buffer. But that was a little bit of a flash there. Not the biggest fan. Knowing my luck, this is going to be a bit of a fake out, and then we're simply just going to run and rip, and I would have been fine anyway. But just on the off chance that I am wrong, I got to protect myself. On the weird off chance, even if there's a 10% chance that this is the start of a true trend reversal, well, that means 1 out of 10 times I'd actually blow my accounts out. So sometimes you have to protect yourself from the low likelihood situations. That's just it's what happens. And vol's picking up, so I have a feeling that someone's trading and maybe doing some shit. What's going on? Is there news? I'm a little bit afraid to trade if there's news popping off right now because we're seeing volume hit the chart pretty aggressively. What's going on? Does anyone have any? This is City CEO. That's 8 minutes ago. Did Trump say something on Truth Social? I'm just trying to figure out what happened there because we saw a very volatile pop drop. 37 seconds ago, 100 days, Scott Turner. He is on Truth Social. Today officially marks 100 days. Truth Social, he did post 1 minute ago, but I'm not necessarily Oh, Amazon statement. The team that runs our ultra low cost Amazon Haul store has considered listing important changes on certain products. This was never a consideration of the main Amazon site, and nothing has been implemented on any Amazon properties. They're already walking it back. They're already walking it back, folks. Amazon not handling the smoke of the administration. Not handling the smoke of the administration. All right, here's a quick look at the options flow. The Mag 7 popped, pulled back, currently flat. The S&P 500 pop, drop, maybe turning back to the upside. 5 minutes bullish, 10 minutes bullish, 30 minutes bullish, but we got to kind of wait 11 minutes for this bar to actually close up here. Same thing on the NASDAQ. But anyway, 5 minute, 10 minute, 30 minute, they're all on the north side of their EMA. So momentum is still bullish. We're seeing this little pickup here. Mag 7 is flat. S&P 500 is trying to pick up. I wouldn't mind playing this breakout. We're on the top side of VWAP. The risk isn't too bad. It's not too bad. But as of right now, I took one trade. I locked one trade in. I made about $150 per account. Not much. At one point, I was up considerably more, but hey, coulda, woulda, shoulda. You never know, because if that just kept ripping, I thought I had a runner on my hands, but apparently not. All right, let's watch this. Let's watch this. We're pushing on the bottom side of this structure. Had I just randomly held that position, I would be underwater right now, but we are at the bottom side of this. Let's just see. Patience, patience, patience. Patience, patience, patience. Remember the old Pareto principle. 80% of your gains are going to come from 20% of your trades. And 80% of your losses are also going to come from a different 20% of your trades. So the name of the game is to really focus on the good 20%, the good top fifth, and try to step away from the bottom 1/5 of bullshit. Where are we at? We didn't really hit my target. We're back down to this support. We had a nice rip all the way up to 5545, but we undershot it by 5 points. So maybe we just retest here and then actually finally get this push. But as of right now, I have no day trade position. I've been swinging calls, and the Discord knows all about that. But once again, that's more of a swing position. Oh, showing a little bit more weakness than I thought we would have right now. A little bit more weakness. All right, watching this upsloping trend line from 9:40 to 10 a.m. Basically, 9:40 is when we saw a pivot in the options market. 10 a.m. is the low of that data announcement. And the Qs are testing it right now. The SPY has a little bit distance to go. Both are roughly close enough to the closing value from yesterday. So we saw a bit of resistance here on this red to green push. You can see we pumped all the way up there and then danced around until a couple minutes after that 10 a.m. announcement. We went above it. The market is not agreeing. And then we came right back down from green to red. And I'm just curious if it'll hold as support. So let's see. Let's see. All right. Let's mark out this recent high there. Let's mark out this recent data low. All right, we have some highs and lows that are at least important to me. I don't know if they're important to you. They are to me. Happy I got out where I did, because I would be underwater by about $800 right now. So that's exactly, like, this pullback in the market is exactly why I'm so aggressive with my risk management. I gave myself a shot of this breakout just in case we had that nice, beautiful, bullish trending day. Clearly, we didn't, because we pulled back, we pushed, we made a higher low a lower high. As soon as I saw that lower high, I moved it up. I was aggressive. I just targeted this recent low, and as soon as it hit it, I was able to lock in a bit of a gain. And the reason I just didn't arbitrarily swing it at that point is because things like this happen. There's a non-zero chance that when we start to do this type of stuff, it could be a legit reversal, and that's a perfect way to blow things out. I would much rather protect my account than be taking on those degen swings, because the last time I did it, that's how I horribly blew my accounts out in March. Horribly blew my accounts out, but I like it because overall you're still risking someone else's money. I'm risking Apex's money, and I'm keeping my own risk very, very small. If you're interested in that, remember they are the partner of today's stream. You can get 80% off if you use that code Goonie, GOONIE. You can take the test for 80% off. So instead of it being $167, you could take the test for like $33. So definitely take advantage of that because it's lasting for another 1 day and 15 hours. 1 day and 15 hours. Oh, brother. Oh, brother. Oh, brother. Oh, brother. All right. Let me mark out some trend lines over here. We're right at VWAP. We're dancing around. So we puked below this trend line. And as you can see right now, we overshot VWAP, bounced above it, and now the market doesn't quite know what it wants to do. Doesn't want to hold this. It's just, this is another area to pay attention to. Of course, it's no guarantee of being bullish or bearish, but the reason people pay attention to VWAP is because commonly you see the market react to it in one direction or another. For example, we overshot it, then quickly recaptured it. And now the market's trying to decide, does it actually want to be bullish? It's thought to be bullish above and bearish below. So right now, we're kind of at an indecisive moment where we're just watching all the current traders roughly an hour into the day digest all the news of the day and also the uncertainty coming this afternoon. I do want to remind you that at 2 p.m. today, we're going to be doing another specialty stream because the Commerce Secretary, Mr. Howard Lutnick, is going to be doing an interview on CNBC. Obviously, he's going to be asked about the current state of trade deals and whatnot. So that's going to be, we kind of get the 1-2 combo today. The old 1-2 combo. This morning we got the Treasury Secretary, and then later this afternoon we're going to be getting the Commerce Secretary. Both guys are thought to be pretty freaking influential to the administration and the current, both guys are thought to be having a big influence of what's happening and what's not happening in the trade war. You ever use fibs, Matt? No, not really. They're fine. They're fine. Once again, no individual tool is the end all be all. I found that your success dramatically increases when you start pairing uncorrelated things together. So when I say uncorrelated, fib levels are based on price movement of the underlying. Well, if you start to pair that with options flow, those are two uncorrelated things because options bets are the current bets, while fib levels, you're trying to get key levels and retracements and extensions. So I have found that there's no one thing. People think that fib levels are the thing, or Elliott wave theory, or they make up random shit. But I cannot stress this enough. There's no one standalone tool that will make you profitable. It just, if you're trying to create a system and you're like, I use EMAs, I use RSI, great. But if you actually want to be net profitable in the long run, you're going to probably want to compare that with something or pair that with something that is not correlated. So for example, when I say not correlated, probably not advantageous to pair RSI and MACD because a lot of the underlying computation is very, very similar. So you're looking at two different versions, two different, they're kind of cousins of the same thing. So be careful of the indicators you're putting together. So it might be interesting to do something like RSI and the cumulative tick or the delta or breadth or volt or told or add. You want to be doing things, putting things together that are not mathematically based on the exact same thing. I think that's very, very important. So inherently, the Fibonacci's, the fib levels are based on price. So if you're going to pair it with something, okay, based on something not priced, maybe you want to pair it with the add, the advancers and decliners, or maybe options flow or the linear regression of options flow. But it is, from a stats standpoint, you want to pair together things that are not related. Because if they are related, you're just getting the same thing in two different versions. EMAs, super trend, VWAP. So EMAs are obviously price movement. Super trend is more of your ATR, and VWAP is just standard deviations. Okay, I would say that's a compelling argument. EMAs, super trend, VWAP. There's a little bit of an overlap, but I think that's fine. EMAs, price momentum, super trend, more of ATR breakouts or breakdowns, and VWAP gives you an idea from market open to now where people are in at it. Okay, yeah, I think that's a fair pairing. An example of an unfair pairing would be what I just said of like RSI and MACD. They're very, very similar. Or like EMAs and SMAs, they're not that far from each other. Exponential moving average versus simple moving averages, they're very just similar. Very, very similar. Or just understand the market and our economic system. Nope, that wouldn't be right. The economy and the stock market are two distinct things. Does Apex allow you to trade crypto? You could trade the Bitcoin contract on the futures market. You could do that. But can you directly trade underlying crypto? No, you would trade the futures contract of Bitcoin, for example. But back to this other, or just understand the market and our economic system. The economic system and understanding of that would help you more of your longer term investments. It wouldn't help you in active swing trading or day trading. Those are two wildly different things. They seem similar because they both deal with the market, but the overlap of the skill set to be successful in those two domains is actually very, very different from each other. Very different from each other, to the point that you probably shouldn't even compare them. What it takes to have an understanding of the economy and monetary policy, that's great for long-term investing, but it almost has zero overlap. The only overlap is your thoughts are expressed in the stock market or some market where you could buy or sell, be bullish or bearish. But that's where it stops, because if you're trying to understand, if you're trying to apply your generic understanding of monetary policy with like scalp trading or day trading, there's just truly no overlap there. Russia nuke strikes threat. What are you talking about? Russia is preparing something in Belarus this summer using military drills as an excuse. Breaking USCB. I'm not seeing anything about that of Russia nukes. I would caution you to say that type of stuff unless you have a source to actually back it up. And there might be a source, but if there is a source, I would ask you to share it rather than just saying it. Because I don't even know what you're trying to say. Russia nuke strikes threat. That's not a full-fledged sentence. Do you have any volume indicators you think are best? Nope. I'll pay attention to volume levels. Hang on. Hang on. The range is so much today. It's not my favorite play, but I am kind of considering playing this recapture of VWAP. Obviously, my risk would be down here. 700. That's a $700 risk, which would make me down net. If I'm wrong, I'm down net 600, which I can stomach. Oh, I can stomach. Oh, do I want to play this? Would you guys play this? Would you guys play this bullish breakout? It pushed it below VWAP, tried to recover first attempt, got smacked again. We're attempting a second time, but we're kind of pinned to VWAP. Obviously, I currently have no position on this right now, but I'm thinking if we can actually put in a higher low and push back. But yesterday, where I got chopped up was VWAP. It was me trying to, literally where I got my ass handed to me yesterday was playing that recapture of VWAP. I'm in, I'm long, I just did, bro, I'm in, this is a C, DEFCON 1, just kidding, nope, going to get smacked back down, nope. Play hymns, 25% gain. Why would I play it when it's already up 25%? That doesn't make sense. If you're getting in after the big move, it's a weak play. Sticky at 19,500. 5 minutes trying to hold, 10 minute, 30 minute, 5 minute actually knocked down, 10 minute, 30 minute knockdown. So the play, Tesla's getting smacked there. MSTR is actually looking nice. Meta's trying to go. NVIDIA, Broadcom. I'm just wondering if this is a classic. See how we had this low at 10? The SPY puked below it. Like, I'm just wondering if this is kind of that wick of just like stop all those people out and then pump. It's a tough one. It's not my favorite setup, but from a technical perspective, that is interesting. You're playing the fake out breakdown. It wicked below it, knocked those people out. What is Mag 7? All right, I'm going to give it a whirl, but because I don't like it, I'm going to use really tight risk. All right, I'm risking roughly $600. I might get lucky. My bot would be going long at 45, so I am slightly front running it, which that might save me 15 points if we end up pushing 45 anyway. But like I said, my bot which has nothing to do with this trend line. It's more of a momentum thing. But there would be enough bullish momentum if we hit 545. So in a weird way, I'm hoping we hit that because then I could take the bot signal anyway. And technically, I'm just saving myself like 15 points of risk. 15 points of risk. So I'm long at 30. 630. 630, 680. All right, that's just the max profit I could go for, I think. That's actually not true. 75. All right. Maybe I'll get lucky. 50-50 shot. Did I pretty much get in the value I was in before? Oh, actually, I got a little bit of a better fill. Before my long was at 36, so had I held through all this, I'd be praying it goes. So now I was able to not only make a little bit of a gain earlier today, but now I got a slightly better fill. Kind of playing this trend line breakout, more so playing the VWAP, and what I'm doing is kind of front running where my bot would fire anyway. The bot would once again fire at 45. So I'm hoping that I just see that because then I don't have to feel that bad and be like, yo, I would have taken the bot trade anyway. It just saves me 15 points of risk. But because I'm not in love with it, you can see instead of risking that low, I'm up here, which is a bit aggressive. But the real goal is on a push of like 60 or 70 right up here. I'd be moving my stop to break even. And similar to earlier today, I'd have a free lotto ticket play. That is kind of right now in the state of these accounts, that is perpetually my goal is can I just get in for a free lotto ticket play? And because I'm not, well, okay, so my bot would have fired anyway. All right, dude, fuck this. No risk. No risk, Matt. Lotto ticket. So because I'm not in love with it, if it comes back, it comes back. There's a high odds chance that happens. But on the off percentage chance that this is the start of a new rip, I get to play it. So to clarify, I have no risk. Stop is moved to break even. This is why you guys should really pay attention to futures trading, especially if you're struggling with options trading. There is no pattern day trading. This is absolutely why I'm such a big fan of futures trading, especially in comparison to option trading. Now, I should say that I do trade options pretty much every day, but if you're a person who's battling with pattern day trading, that does not exist in futures. So like what I just did, I moved my stop to break even. A lot of the times you end up not doing that in options trading because you're like, well, hang on, if I get stopped out, I don't want to burn one of my pattern day trades because you only have so many. You get 3 for every rolling 5 days and it sucks. So I think that the pattern day trading rule actually kind of tricks us into taking on more risk than we would normally want to take on. While with futures trading, it doesn't matter. If you want to trade 10 times today, you could trade 10 times. That's why I think everyone should honestly give this a whirl. Futures trading is awesome. I'm biased because it's the first thing I really started trading with. But better than that is you could get in for super low risk, 80% off. You could be in for the total risk of like $33 to take the test. If you pass the test and upgrade, it's 80. So what, your max risk is 110, 120 bucks? I mean, let's be honest. Even if you're trading what you would self-identify as a smaller account, you're probably risking more than $120 anyway. So I find that this is a great way to put a cap on your max risk. On top of that, it allows you to express better risk management, like I just did. Stops at break even, not risking anything. So I think there's so many things that add up to not only why you should consider futures trading, but why you should consider sim-to-funded futures trading, because futures in itself, no pattern day trading, and you could trade in a way that has better risk management. Sim-to-funded futures trading, not only do you get the advantages of futures trading, but on top of it, you're minimizing your risk even more because it's sim-to-funded and the risk is on the firm. And granted, you have some financial risk of basically what you put on your credit card bill, but if you blow out, it doesn't matter. Your risk was only what you put on your credit card bill. How much money as a percent does he make from Apex? Say if he trades made 50K. It changes. The answer to that is dynamic. So you're allowed, every account size has a max payout for the first 6 payout cycles. On a 50K account, you could take $2,000 from each account. And then after number 6, by the time you get to payout cycle number 7, then it's uncapped and you could take whatever you want. So basically, per account, not in the whole thing right here, I have 20 accounts. So I could take out 2K from each one, as in 40K, and I could do that 6 times. I could take out $240,000 with the cap per account being 2K, so 40K per payout cycle in max. From there, by the time you get to payout cycle number 7, at 7, and then from there on out, you could take whatever money you want. There's no more 2K max per account. It's unlimited. I nuked my account because of the PDD rule. I kept making bad decisions, now trading on my cash account, futures trading on a different platform. Yeah, I mean, I was attracted to futures trading for 2 different reasons. Reason number 1, are we running into a bit of an issue here? So I kind of front ran this trend line breakout. I got lucky. I also front ran my bot, but hey, sometimes you just get lucky. Doesn't really matter. That's why I was aggressive about my stop. But I'm noticing we're running into an issue here at 80. We got rejected, 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 rejected. We're currently battling it out here. Kind of part of me wants to move my stop all the way up to 60. Because then no matter what, I make $600 and then I'd be up $700 on the day. As of right now, I'm up about $1,000 on the day and I'm trading on 25 different accounts, as in I'm up about net 25 grand right now, real time. But to be fair, I'm trying to be as transparent as I possibly can. This is not an account high. I took a hit yesterday. My account at the start of yesterday was at $56,000. So some quick math, I'm underwater by about 700 from my account equity high. So I did take about a 1.8K hit. This is my 4th day of trading these accounts. Day 1, I made 3K. Day 2, I made 3K. Day 3, I lost 1.8 for a net of 4.2. So 3 up to 6, down to 4.2. And then obviously we are here on day 4 right now. But it's 90-10 split. It's a 90-10 split after your first 25,000, which is completely different. So the first $500,000 is completely yours and you're not splitting it with the company anyway. The first $500,000 in payouts is 100% yours. And to be honest, based on the percentage of people who get there, that is not something any of you in here have to consider. It is very statistically rare for someone to be pushing that $500,000 point to the point that honestly, you do not need to consider it. The first 25K per trading account is yours. 25K, 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 25K. The first cumulative $500,000 is yours without a profit split. $500,000. So if you're like, well, hang on, I don't want to do a 90-10 split. Well, first of all, let's see you get all the way up there. Let's not put the cart in front of the horse. Let's see if you can get all the way up to $500,000. And after that, you're making so much money that you don't care about you getting 90%. Hasn't passed the eval and he's already worrying about the 90-10 split. Yeah, that's if you run into that being a problem, it's a very good problem to have because it literally means they've already given you a $500,000. So like, let's put a little bit of perspective on what that means. All right. Some people are asking for the options flow. Here's a look at the Mag 7. We got a nice pump. It is turning. I am not the biggest fan of that. S&P 500, same thing. Pump, turning, now flat. We're seemingly running into a random issue that we ran into at 10:15. I don't have this as a key level. I'm surprised the market's reacting to it. There's not that much. As of market open, this was not a key open interest level. Fuck, it's coming for me again, isn't it? Shit. I cannot have it dip that much because my stop is right here. Come on. Hopefully it can catch itself at this EMA. This is just a basic EMA line. Hopefully, like before, if we get a pump, I could then use this low as my risk and guarantee myself 15 points, which is about $300. I already made 100, so I'd be up 400 on the day. But for that to happen, I'd need to see a pretty decisive pump from right here, and ideally for this sell-off to still stop. The reason we're selling off is right here. You can see options are getting hit in real time. Son of a gun. 5 minutes bullish, 10 minutes bullish, 30 minutes bullish, 5 minutes bullish, 10 minutes bullish, 30 minute is bullish. It's always frustrating when it happens. And the way this is happening, like, there's a very high odds chance that if I were willing to take on more risk, this would work out for me. But because I'm unwilling to take more risk, there's a high odds chance that I get clocked before it actually runs. I think there is a very, very good statistical chance that at some point today we hit 5,550, but I don't necessarily want to take on that risk if I have to potentially withstand a drawdown all the way to this new low, because just because I think there's a high odds chance, it's not a guarantee. And the fact that there's not a guarantee is exactly why I'm doing this lotto ticket play. And if I could get lucky, I get lucky. But remember, most of the time, you're not going to be getting lucky. If you trade in the way that I do, which is where I found success, you do have to be mentally accepting of the fact that there's like more than 50% of the time, more than half the time, I am stopped out for break even. And every time it happens, it sucks because you're always trying to make money, and it's cool when you see yourself going up. Like, that was the second time today I was up $1,000. The second time today. And it happens a lot, and it can screw with your psychology. But the reason you do that is because every so often you catch that banger that goes up 3, 4, 5K. And then that's where you pay off your like small unit losses or your paper cut losses type of a situation. But it is, even as a person who's like done this and seen success for it, I guess I'm just trying to be a little bit more vocal about the fact that like it's not as much as it makes sense in person when you are saying it, like, yeah, that's a cool way to like engage in the market, and it makes sense. Like, I think it's one of those like aha moments of like, oh, we should all trade with it. That is still very, very different than doing it in real time. So there are things of in practice that you have to handle that maybe you don't fully appreciate when it's being explained in theory. And this is one of those circumstances. Is at one point this trade was up at 1,000. This other one, I was up more than 1,000. To be up that money and then to see it disappear, it's not necessarily easy. So just, I guess if you choose to trade in the lotto ticket methodology that I preach and trade in day out when I'm trading well every single day, you gotta consider that. You gotta. And honestly, at this point, I might just now, similar to before, I'm moving my stop right up to that. So no matter what, I'm making $200. No matter what, I'm making 10 points, which would bring my net gain on the day to 300 in total. 300 times 25. Obviously, you could do the math, but making a decent chunk. Can't complain about it. I'm learning a lot of Spanish from Matt. Yeah, I'm basically the new age. I'm the Gen Z Dora the Explorer. You guys didn't know that about me? They just said, hey, we need this white kid from rural PA to be the new Dora. And that's what I'm here for. And like this, sometimes you get lucky. On the pullback, it doesn't clock you out, and then it rips, and it's all good. And you're already back up 25K. I can't do math, dude. No one can do math. I don't think I've met a person in this world who could actually do math, you know? All right. The SPY taking out kind of a recent shelf, but now kind of attempting to... Oop, I did not want to do that. How did I have that drawn? Okay, that was right. All right. So I'm watching this recent low. which hopefully it can hold. Very indecisive. Very indecisive. And hopefully we could go for a new intraday high. I have to admit, the levels we hit this morning, I did not anticipate. I really thought by the time we got this close, we'd be going to 5,550. Instead, it got smacked at 45, 5 points early, had a pretty sizable drawdown of 30 plus points. And then we had a pretty sizable pop of about, 30 points, then a drawdown, then a pop, potential cup and handle. I'm just looking at this being a higher high. Really, when it comes down to the world of technical analysis, what really matters is just look at the main pivot points, the highs and the lows. Are your highs getting higher? Are your lows getting higher? Which direction are your highs and your lows going? As of right now, this green one to this green one, we have a lower high. This red one to this red one, we have a higher low. As in right now, the market's not trending. It's pretty indecisive. So that's from a lens of price action. Looking at it from an options market perspective, we are clearly not trending. The Mag 7 is flat. The S&P 500 was hit, trying to recover, but overall flat. So options not trending. Price not really trending. Momentum is bullish, 5 minute, 10 minute, 30 minute, all bullish, 5 minute, 10 minute, 30 minute, 4 hour on. So all 8 of those are bullish. Let me look at I have one more metric that I could check for you guys. Oh, okay. A very, very important note. The way the 0 DTE calls are being played today. This is very, very important. The odds of us holding above 5,555 as of right now, maybe 5,600, like this zone, we are not set up for a big rally day. Based on the current trades that have hit the market from 9:30 market open to 10:50 right now, from that time frame, based on that data, there is not bullish aggression hitting the chain above 5,560. As in, if you are playing this, this is a good zone to take your money, say peace, I'll return tomorrow, because the options flow in real time right now is not structured for a big trend day. I'm telling you this. This is very, very important. There are certain days where it is structured for a nice run and we pump and pump and pump based on the current data. And of course, this could change in 1 minute, 5 minutes, 15 minutes. It could change this afternoon. But if it does not change, if we see the same type of plays from market participants, we will not be pushing above this area. And if we do, it's going to get quickly faded because we are just not seeing bullish aggression above roughly this zone. So just be careful on that note. This is actually making me more confident in playing the market up to here, taking my money and saying, peace, I'll see you again tomorrow. I think that is, in my opinion, the play of the day. And it might not matter because it looks like I'm about to get clocked. We just put in a lower high. It might be what's probably going to happen is it's going to come down, wake me out, and then pop and go all the way up to 5,550 and probably do it without me. Yep, I'm about to get clocked, but I'll be green on the day. That's all I really care about is slowly but surely climbing up. Shit. This lower high is kind of what's screwing me. I wanted some follow through to see that bullish momentum, and we're simply just not seeing it. It sucks. It sucks. It sucks. It sucks. But it just is what it is. Maybe I'll get lucky. Maybe your boy will be a lucky leprechaun today. But when I find myself doing that mental bargaining of like, you might get lucky, you might not get lucky. When I find myself doing that, generally not getting lucky. Generally not getting lucky. But who knows? Maybe today's the day that after screwing me over yesterday, maybe today's the day that the market gods, they bless my position. That got real close to knocking me out. Within 2 points, come on. Why can't we just see this push and break of 80? This resistance that we've now seen multiple times. They just keep going. Just keep going. No red. Stop it. Stop it. Stop it. Stop it. Shit. It's coming for me. I had a glimmer in my eye when I saw this pump. I was like, okay, just avoided that. And then the pump quickly got faded. And I'm not necessarily going to be aggressive in the sense of moving my stop down to give it more breathing room because I'm not seeing that much optimism in the options flow. So I'll take it if I could get lucky. But right now, this options flow is not, it's not looking constructive enough, in my opinion, to take on that extra risk. So I'll take on the risk of no risk. My stop's in the money. I'll make $200 per account. So like, I'm willing to take on that risk. I would give it more room to breathe if the options market were absolutely ripping, but it's not absolutely ripping. And as much as I wish it were, it's not. So I have to consider that and basically just say either I'm going to get lucky or I'm not, which I think sometimes based on the setup, you could be willing to take more risk and be like, man, so many things are looking so good. Give it that room to breathe, because like if it goes, it goes. But right now, I'm not going to give it room to breathe because the options flow is not strong. It's neutral, maybe even potentially a bit bearish. The EMA, the momentum, it is bullish, but maybe not convincingly so. We see a shelf being put on top of us at like 5560, 5570. So in terms of the upside, I'm not seeing that aggressive call action come in. And we know that the market might be a little bit hesitant going into the Letnick meeting at 2 p.m. So this is not a day for me to take on more risk. And I spoke about this a lot in the Discord yesterday, and shout out to everyone in the Discord who like, we kind of work through this psychology. But some days are just shit days. And the only thing you could really do on those days is protect yourself. So as of now, I'm not really seeing the underlying data set say today's the day to take that big bullish and or bearish risk. We're just not seeing things set up in a big trending fashion. So I'm taking a bit of a risk. Like I'm in the trade. This is my second trade of the day, but it's not necessarily that day where you're like, dude, like if we get going, we could really get going. It's just not there. Not every day is the same. And I think for me to get these payouts, to keep my sanity, for my P&L to go up and up and up, sometimes you just have to admit certain days are shit. You protect yourself. If you get lucky, you get lucky. If you get unlucky, you get unlucky. But the point is surviving. And right here, looks like maybe I'll get lucky. It got real close to knocking me out. Within a point and a half. I was basically a point away, and it just didn't clock me. Lady Luck's on my side, dude. And that's another thing that I think equals out, because very much yesterday, Lady Luck was not on my side. No matter what I did yesterday, Lady Luck elbowed me in my temple. And when I was unconscious on the ground, she teabagged me. So I think if anything, this is the pendulum of luck coming back in my favor after it being very much out of my favor yesterday. So honestly, I might move this up even more. Just play the trend line breakout bar and just move it up to 62. And basically you're saying, hey, the breakout either needs to hold or not, because that's a good way for me to make $600. I already up 100. So it would be guaranteeing me 700 on the day. All right, we're popping. I'm really thinking about moving my risk up to 60. Because at $600, I'm already up 100. So I'd be up 700 on the day. So that'd be guaranteeing myself 14 grand today, which is nice. And in a mere, by the time we hit 615, 620 right here, I would be back to my equity account high. Remember, the equity account high is 56 grand, and right now I'm at 55.7. So around 56 or 19,610, 15 right here is a new equity high for me for these accounts. And then obviously on the market, we are also seeing a new high, which actually, yes. Where are we at? Today is the 29th. All right, if you are in the Discord, the Piper signal just fired if you're curious about the bias of the day. So if you're in the Discord, bias of the day, mathematically proven, it's in there. You guys know the odds of it. So that's in there. Pairing that with the Wheel of Destiny, MicroStrategy's popping. I would love for Tesla to actually get going as well, but MSTR is looking good. I'd love for Broadcom to pick up. MSTR is a monster, dude. This has been nonstop. SPY, new high. Intraday new high, currently gunning for this area. I cannot stress this enough. I'll double check just in case something has changed. I will double check, folks. It pains me to say this, but it's just 5560. Like there's a shelf being put in somewhere in this area. Somewhere roughly in this area, there is a clear ceiling being established from the call traders today. So I would be hesitant to be continually greedy past this point. The more we push, the closer we're going to be to that ceiling based on the current trades. Now, obviously the situation is dynamic and people are trading. So it could change. But I'm just telling you, as of right now, this exact moment, I am not seeing much reason to be like so greedy past taking out yesterday's high, this key open interest level. I think this is going to be a battle on a pop-up here. It might be one of those situations. Cool. Deuces, lock it in, take the money, and you avoid the risk of the Lutnick meeting this afternoon. It's an early day. You're done before lunch. It's just we're not seeing what we need to see for a constructive trend following day. If anything, it seems like we might be getting up here, and then we just get into a bit of a mess. We just hit 610, which would have been where I could have been back to that new account equity high. The breakout bar is at 61. Oh, I need to move my risk up. I'm just trying to decide if I want to do it at 50 or if I want to do it at 60. 50 or 60, 50 or 60, 50 or 60, 50 or 60. I'm going to take the money. All right, so no matter what, I am making 30 points, which is $600. I've already made 100. So no matter what, I'm making $700 per account today. Worst case scenario, $700 per account, guaranteed. I have 25 accounts. That's a nice 14, 15K, no matter what. What are you expecting from Lutnick? I have no expectations. It's where I'm at. He's going to stream it. Yeah, I am streaming it. So Lutnick is speaking on CNBC at 2 p.m. today. I will be streaming it. So we're going to do that instead of the update video. So we'll start streaming around like 1:50, 1:45, something like that. But yes, we will be doing a specialty afternoon stream. Anyway, I would love for this to pump, because if we take out this new intraday high right here, I'm just going to move my risk up to 82. And then that would be guaranteeing myself at least $1,000 on the day. And now we're starting to talk serious numbers, because that's 25K. Obviously $1,000 multiplied by 25 accounts. Come on. I would love to see this push above 610, 630. Come on. So Bessent is the Secretary of Finance, right? I don't think there's such a thing as Secretary of Finance. He's the Treasury Secretary. Secretary of Finance, I don't believe is an established position or title in the U.S. He's the Treasury Secretary. All right. Bada bing, bada boom. Moving the stop up, 81. I'm in at 29. That means your boy's making $1,000. No matter what, I'm giving myself an opportunity that if this is a breakout run, cool, I'm in, and it might run all the way up here and I make $3,000. But just in the case that this is the extreme, or we pull back, or there's some adverse volatility or something like that, whatever. I made $1,000 per account. And if you make $25,000 in a day, call me old fashioned, but I don't think you should be bitching and moaning about it. $25,000 in one day. I've worked from 9:30 to 11 for 90 minutes of work to make $25,000. Like I said, call me old fashioned, but I'm going to call that a pretty freaking good day. I'm going to call that a pretty freaking good day. All right. We just tagged it, and this is why I'm aggressive with the stop movement more than I have been, is because there is a decent chance we get rejected in here. And even if we don't, there's a ceiling being put in here. I will double check that. Yeah. 5.5. Yeah, somewhere in this region, there's a ceiling. And then hang on, I didn't mean to do that. There's somewhere in here, there's a ceiling being created. And on top of it, this is a key open interest level. This is a key technical level. So we could get rejected here, here, or here. There's my point is there's a lot of resistance. And then we also have the upside gap fill. That could be resistance. So what I would say is don't necessarily cut your trade early. Just ride the trend tightly. And if there's a bit of a pullback, just say, cool, thank you, because theoretically you're in from way below. Would I be chasing this right now? God, no. No. If you don't have a bullish position already, don't chase it at the intraday high right before major resistance, major resistance, major resistance, major resistance. That's just simply not a smart play. But if you're already playing it, cool, ride the trend. Like a really tight stop. And if it keeps going, great. You have some skin in the game if it's a nice trend. If the trend breaks down, you take your money and you move on with your life. You take your money and you move on with your life. Not every day is built the same. As I was saying before, not every day you're going to make a shitload. Some days are good days. Some days are bad days. And right now, I'm telling you, today is not setting up for that beautiful 3, 4, 5% trend. Excuse me. It's just not. I'll double check just to make sure it hasn't changed. I would love to be the messenger telling you guys that this is a beautiful trend day. We're going up, we're getting the upside gap fill, we're going to run up to 5,600 and we're going to test that and break, and that's where the setup is. It's just we tagged 5,550. Enough people, Delta went to 50, they went in the money and they started taking a bit of their profits. It would be a completely different story if the SPY was just ripping all day, but the Delta flow looks weird. Looking at the Mag 7, the Mag 7's not pushing. We just don't have that underlying foundation for that nice pump. And
order canceled.
All right, I just got clocked. Yep, I just got clocked. Okay, I'm done. Right there. I made 1.1K per account. I have 25 accounts. So what's that? 27.5K. Not a bad day. Not a bad day. And that's it. That was my second trade of the day. The first one was roughly break even. That one, I tried to aggressively trend follow it. Obviously, I used that low. It went there. And yeah, it could keep going. I do admit that there's a fair argument for some additional distance somewhere up in here for sure. But also, we just got rejected at the exact level I called out to all of you of saying, hey, that's a key open interest level. We're getting the pullback. If there's a higher low and you want to take advantage of it, dude, have at it. The best of luck to you. But for me, I'm good on the day. I don't want to overstay my welcome. This is the third time today I was up a grand. I was up a grand, and now finally I was able to be smart enough and lock in one of those times I'm up a grand. I don't need to overstay my welcome. I made my money, and if it goes, it goes. It's going to be going without me today. I would be more willing to get back in if I saw a lot of the underlying things be really, really supportive. I'm just not seeing it today. I wish it were true. It just simply is not. So right there, let me just double check that I have no pending orders. Cancel all orders. Cancel all orders. I just want to make sure that I don't accidentally screw myself over. All right. We're killing all the orders just so I don't have any rogue ghost orders. That's in the past kind of screwed me over. So, all right. I just canceled all the orders, but to just show you guys in real time, I'm donezo. Dunzo. Matt, are your positions on Apex leverage? They're leveraged by the normal leverage rate of futures. Futures contracts in general are very leveraged. So I'm trading futures. So the answer is yes, but the answer is yes because all futures are leveraged. It's just an inherent aspect of the contract that you're trading. Futures contracts are leveraged. So I took my money. I'm stoked. I will see you guys back here at 2 p.m. Eastern for the Commerce Secretary Howard Lutnick interview on CNBC. That's what I have for you guys. Remember, if you want to trade with someone else's money, you could get 80% off the Apex test right now. It's going to be there for a day and a half. Use that code GOONIE, GOONIE. If you don't use it, you're not going to get the discount. It doesn't auto apply it. When you're checking out, there's a coupon section. It's relatively early on in the process. Make sure you put GOONIE, GOONIE in there, because without it, you'll have to pay the full freight, and it's silly for you to pay the full freight when you could get a nice 80% discount. So is it worth it? I would strongly worth it because I'm trading with someone else's money, made a quick 25 grand, had somewhat of an easy day, and we're moving on with life. moving on with life. That's what I have for you guys. Obviously, shout out to Apex. Highly recommend you guys check it out. Pinned to the top of chat in the description of the video. I will... I'm trying to think of anything else. I guess if there's anything important, I'll just tell you guys in the 2 p.m. stream, but I'll see you back at 2 p.m. today. Commerce Secretary Howard Lutnick going to be interviewed on CNBC about whatever's going on in the current state of the trade war, the tariff war, whatever you want to call it. But we're going to be streaming that just to see what in the world is going on. So I'll see you guys back in a couple hours. In the meantime, I'll hang out with all of you guys who are in the Discord. Check out Apex. I'm trying to think of anything else. Other than that, I guess respect your risk. Be careful about those upside levels. There's a clear ceiling being put in today. And that's about all I have for you. And if I forgot anything, I'll see you guys later this afternoon. That's what I have for you. I appreciate all the good vibes. Catch you guys in a bit. Peace.